The committee will come to order. Without objection, the chair is authorized to declare recess of the committee at any time, and all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. This hearing is entitled The Annual Testimony of the Secretary of Treasury on the State of the International Finance System. I now recognize myself for 5 minutes to give an opening statement. Whether you are looking at unemployment, disposable family income, GDP, small business optimism, you name it, it is clear that many, if not most Americans, are enjoying the very best economy of their entire lifetimes. And no man is more responsible than President Donald Trump. However, if we find ourselves mired in a full-fledged global trade war with no end in sight, all of the economic gains he has helped bring us may well be lost. I've heard the president boldly call for the elimination of global tariffs. I enthusiastically applaud the president for doing so. However, I also continue to hear talk from the administration of, quote, ending trade deficits and, quote, imposing reciprocal trade policies. These are not identical goals to reducing trade barriers. For example, we could end trade deficits tomorrow by simply outlawing trade, and then watch as GDP and disposable family income plummet. With respect to reciprocal trade agreements, just because other nations punish their consumers with tariffs doesn't mean we should necessarily follow suit. Because at the end of the day, a tariff is a tax that is usually passed on to the consumer. So for the example, when the administration first announced their tariffs on steel, aluminum, and washing machines earlier this year, it became more expensive for working Americans to share a six-pack with their friends at the local laundromat. And as of last Friday, when the administration announced $34 billion in tariffs on an array of Chinese goods, including auto parts, it also became more expensive to work on your car in the same laundromat parking lot. And now, with an additional $200 billion in tariffs announced, who knows whether the laundromat will even be here at year's end. As my constituent Chris in Mesquite, Texas wrote me about tariffs, quote, I'm now facing increased cost in auto parts and housing. It can't get any closer to home than that. Not only do tariffs harm American consumers, they harm many American employers and their American workers as well, since over half of our imports are intermediate components or raw materials for American businesses. As my constituent Elizabeth from Dallas wrote me, quote, I am a metal manufacturer. Since the tariff talk began in February, I have seen major increases, well over 25% from steel vendors and the mills. Soon my end users won't be able to afford the cost of our products. I may have to actually lay off workers, unquote. This is the voice of but one American business, but she undoubtedly speaks for many. Tariffs can also damage entire industries, including strategic ones like our domestic energy industry. For most of my life, America has been energy dependent. Now we're on the cusp of producing more oil than any country in the world. But the oil and gas industry imports specialty steel and aluminum for pipelines, wells, and other infrastructures. The tariffs may just harm our ability to remain energy independent. And I've yet to speak of the retaliatory tariffs of the EU, Canada, Mexico, and China. Needless to say, it's a bad time to be an American SUV producer or an American soybean farmer. As soybean prices have dropped to their lowest level in almost a decade, one farmer said about his family farm, quote, that's $100,000 that has disappeared into thin air. We were already in the red, now it's even worse, unquote. We have known since the days of Adam Smith and David Ricardo that trade is a win-win situation. No trade, in contrast, is a lose-lose situation. I understand that our trading partners have more to lose than we do because their economies are far more export-dependent, but losing less is not the same as winning more. When the dust finally settles, the administration's trade policy may prove to be brilliant. I hope so. With patience, short-term pain may pay off in long-term gain if tariff and non-tariff trade barriers are actually reduced. But in the meantime, CapEx checkbooks are closing and expansion plans are being put on hold as growing uncertainty creeps throughout our economy. So I hope it is time that we get on with it. I would respectfully call upon the administration to concentrate time, resources, diplomacy on those nations that consistently violate WTO guidelines and force involuntary IP and technology transfers. In other words, it is the moment we should be uniting with our traditional allies to confront China. I would also call upon the administration to drop any effort to unilaterally impose auto tariffs under Section 232. The 11-year-old Honda Accord I drove to work today in simply does not threaten national security, nor does any other imported vehicle. I fear further efforts in this regard are counterproductive and will simply undermine the administration's credibility. I do wish, though, to compliment the President and Secretary Mnuchin for working with Congress on vital CFIUS reform. Thanks to the leadership of Mr. Pittenger, Mr. Heck, Mr. Barr, and the ranking member, the House's bill was passed 400-2, and we look forward to going to conference with the Senate. This shows how the administration and Congress and both parties can work together on shared trade goals. The administration should continue to work collaboratively with Congress on trade, and yesterday's Senate 88-11 vote is indicative of its importance. I now yield 3 minutes to the ranking member for an opening statement.
Thank you very much, Mr. Chairman. I'm looking forward to hearing Secretary Mnuchin's testimony today on the state of the international financial system. I must admit that I was surprised to learn that the Trump administration had agreed to back a $13 billion capital increase for the World Bank and the IFC, that is the International Monetary Fund. This positive step is a notable departure from the Trump administration's unprecedented and harmful approach to multilateral agreement. However, it would be a serious mistake for the World Bank to take my support for this capital increase for granted. I'm extremely concerned about the bank's recent recommendations in its upcoming World Development Report for the wide-scale dismantling of regulations protecting workers, including lower minimum wages and greater firing powers, particularly in developing countries. The World Bank should not be rewriting the social compact to recast the balance of power between labor and capital. This will lead to greater inequality and undermine social cohesion and ultimately harm the bank's legitimacy and relevance in the fight against global poverty. That said, Mr. Chairman, while I do appreciate the administration's support of the World Bank, I'm very concerned about the actions this administration has taken in many other areas that fall into the purview of the Treasury Secretary. As we meet here today, the Trump administration is waging a trade war that will have wide-ranging economic consequences. Last week, Mid-Continental Nail, America's largest nail manufacturer, laid off 60 workers and announced that the whole company would go out of business by Labor Day. Volvo no longer plans to hire 4,000 workers in South Carolina. The U.S. Chamber of Commerce is warning that 2.6 million jobs are at risk. Hard-working Americans are already suffering as a result of the retaliatory tariffs provoked by the ensuing economic uncertainty caused by this president. Moreover, this trade war comes at a time when our deficit has ballooned due to the Republican tax law, which has been nothing more than a giveaway to very wealthy individuals, Wall Street banks, and big corporations. I look forward to hearing Secretary Mnuchin address the adverse impact this administration's policies are having and will have on small businesses and consumers, and I yield back the balance of my time.
Gentlelady yields back. The chair now recognizes the gentlelady from Wisconsin, Ms. Moore, ranking member of the Monetary Policy and Trade Subcommittee, for 2 minutes.
Thank you so much, Mr. Chairman, and I want to welcome Secretary Mnuchin back to the committee. I appreciate your reply to my letter that I sent of May 17th. You replied just recently. The letter was related to the transfer of the Universal Service Fund to the Department of Treasury. So I look forward to your testimony, but during the Q&A, we've already alerted your staff so that you could be prepared for my questions. There are outstanding issues surrounding the Universal Service Fund that are important to both my urban constituents and rural constituents of many of my Republican colleagues here who really rely on these services. like the Rural Healthcare Program, the Connect America Fund, and in my district, there are over 50,000 households that subscribe to the Lifeline, just one of the programs that's supported. And as you know, it connects disabled people, poor people with jobs and with healthcare assets. I'm going to appreciate hearing a detailed explanation of the regulations, resources, and staff you've put in place to ensure that the FCC continues to use these funds to provide telecommunications access to Americans, and insurance from you that these services will not be disrupted, the specific funds that you've deposited into the Treasury account, and the funds that you're still waiting to be transferred that you referred to in your letter, and how you plan to make up for the loss of interest that the funds were in interest-bearing accounts in the private sector when they were there, and how you're going to make up the deficit so that there won't be any lapse in ability to serve those constituents. And so I look forward to your testimony, Mr. Secretary, and I yield back the plethora of time that I have.
Gentlelady yields back. Today we welcome back to the committee for his third appearance the Honorable Stephen Mnuchin, Secretary of the U.S. Department of Treasury. Secretary Mnuchin has previously testified before this committee, and so because of that, I believe he needs no further introduction. Without objection, the witness's written statement will be made part of the committee record. Secretary Mnuchin, welcome again, and you are now recognized to give an oral presentation of your testimony. Thank you.
Thank you. Chairman Henseling, Ranking Member Waters, and members of the committee. It is good to be here with you today to discuss the National Advisory Council on International Monetary and Financial Policies report to Congress and other priorities of the Treasury Department. The NAC report highlights international financial institutions' roles in encouraging global macroeconomic growth and financial stability, advancing U.S. national security priorities, supporting the development of markets for U.S. business, and working to alleviate poverty. The Treasury has promoted reforms at the IFIs to help them better contribute to these objectives, and we will continue our efforts to increase the IFI's effectiveness and value to taxpayers. I would like to note that the International Monetary Fund's periodic review of quotas is scheduled to be concluded next year. Every 5 years, the fund reviews its financial resources and decides whether to increase them. At this time, the United States finds that the IMF's overall resources are adequate following the 2016 implementation of the 2010 quota and governance reforms. I also want to highlight the strength of the U.S. economy. We continue to implement President Trump's economic agenda focused on tax cuts, regulatory reform, and trade. In only 6 months since the passage of the Tax Cuts and Jobs Act, Americans are seeing faster GDP growth, more money in their paychecks, and better career opportunities. Unemployment numbers are historically low, with an average of over 200,000 jobs added each month of the second quarter this year. Over 500 companies have announced bonuses, wage increases, and enhanced benefits. The National Federation of Independent Business, the National Association of Manufacturers, and the Consumer Confidence Index are all at reporting record levels of optimism. Americans are keeping more of their hard-earned money, and U.S. business is more competitive. Our efforts to eliminate unnecessary burdensome regulations are also having a tremendous impact. We have worked closely with this committee and others in Congress, as well as our colleagues across the administration, to create a regulatory environment that is more efficient and predictable for business. These reforms are enhancing the flow of credit and supporting job creation and wage growth. At the same time, we remain committed to ensuring the stability of the financial system and protecting taxpayers and consumers. Our tax and regulatory reform agenda complements our trade efforts. We strongly support Congress's bipartisan effort to strengthen and modernize the Committee on Foreign Investment in the United States, CFIUS, review process and its inclusion in the National Defense Authorization Act. The administration is pleased to work with members to maintain our open investment environment while ensuring that certain transactions are reviewed for national security purposes. We have made great progress in the last 18 months in implementing the President's agenda. We are working every day to guide multilateral financial organizations towards a limited role that is more consistent with free markets, faster growth, and U.S. national interests. Hardworking taxpayers across the country are optimistic that they will have more prosperous and secure future, and we are seeing America's great potential come to fruition. Thank you very much. I look forward to answering your questions.
Thank you, Mr. Secretary. I will now yield to myself for questioning. Clearly, as you heard from my opening remarks, I am most concerned about the status of global trade, and I realize that most of this was within the bailiwick of USTR and Commerce, but clearly America's trade policies do have an impact on the international finance system. So again, as I said, I've been heartened by comments by the President and by Secretary Royce that our goal appears to be to eliminate or at least significantly reduce trade barriers. But I am concerned because in the one trade agreement that has been modified since the administration began its policy, Korea, what I think I saw in the Korean agreement is the imposition of a quota on Korean steel exports to the U.S. and a 20-year extension of a 25% tariff on Korean trucks. So I would hope that the answer and the goal would be for America to export more, not necessarily import less. And so the question, Mr. Secretary, is Korea the template for future modifications of our bilateral or multilateral trade agreements?
Mr. Chairman, thank you very much. And I have had the opportunity to work very closely with Ambassador Lighthizer and Secretary Royce and others in the administration with the President. The President is very focused on free and fair trade. As you mentioned, at the G7, the President specifically said, let's sign a free trade agreement with no tariffs, no barriers, no subsidies. So the President is very much focused, fighting every day on having free and fair trade. In regards to your question, there's no specific model for other agreements. We are very focused on NAFTA and renegotiating that.
Well, I would just say again, Mr. Secretary, I appreciate the words, but I am concerned about the deeds as I look at the Korean how the Korean trade agreement has been modified. Mr. Secretary, I also want to speak again. I could not say it more clearly that many Americans are seeing an economic miracle, and it's because of the President and, frankly, the work you have done and others on tax cut, the increased jobs, right-sizing regulation. But I think the greatest economic stimulus I've seen is business optimism. And unfortunately, my fear is that may be receding. I'm not sure if you're familiar. CNBC does a survey of CFOs of major U.S. Companies, and 65% have reported that they fear U.S. trade policy will negatively impact their firms over the next 6 months. It's been reported as of July 6th that the FOMC's minutes of June meeting had this in it, quote, most FOMC participants noted that uncertainty and risk associated with trade policy had intensified and were concerned that such uncertainty and risk eventually could have negative effects on business sentiment and investment spending. So I'm just curious, Mr. Secretary, how does the administration think about business uncertainty as it calculates its trade policy?
Mr. Chairman, I can assure you that the President is very much focused on economic growth, and I can also assure you that I am monitoring the situation very carefully. I'm not familiar with that specific poll, but I speak on a regular basis to many industries as well as people within the administration, and we are monitoring the economic situation. We have not yet seen any negative impact, although, as you've said, we are monitoring carefully the impact on uncertainty on investments.
Well, again, as you know, Mr. Secretary, even as of today, the actual tariffs are a small part of our global trade, but that is soon to change if the $200 billion that has now been threatened against China actually comes to be in 60 days. I guess the last question I would have, Mr. Secretary, is I'm curious how the administration thinks about the possibility of a global recession. I mean, in the U.S., as you know, we're facing rising interest rates. The Fed needs to have an orderly wind down of its balance sheet. You know better than others that we may be looking at an inverted yield curve that, at least historically, has been a leading indicator of a recession. We know about tightening monetary policy in other segments. So there's already a threat to economic growth. How do you factor that in, again, to the administration's trade policy? What is the risk?
Mr. Chairman, let me just comment specifically on the, we don't have an inverted yield curve. There is a flattening of the yield curve. That somewhat reflects people's future view of rates and where rates will be. I don't think that's indicative of any way of recessionary concerns. And as I said, we are monitoring very carefully the impact of tariffs, and we will continue to do so. And we are very focused on economic growth and look forward to what hopefully will be a very big quarter of GDP and future growth for the balance of the year and next year.
The time has expired. I now recognize the ranking member for 5 minutes.
Thank you very much, Mr. Secretary. Because of this president's trade war, again, Mid-Continental Nail that I mentioned in my opening statement, America's largest nail manufacturer based in Missouri, laid off 60 workers last week and expects to go out of business by Labor Day. Harley-Davidson. This company is as American as motherhood and apple pie. Based in Wisconsin, is moving jobs overseas to Europe to avoid tariffs on its exports. Volvo, again, will no longer hire 4,000 new workers in South Carolina, and the U.S. Chamber of Commerce warns that 2.6 million jobs are on the chopping block because of Trump's policy on tariffs. On top of all the job loss, American families will pay higher prices for the goods that they buy since tariffs are a tax paid by Americans. And it seems things are only going to get worse. Just yesterday, Trump announced that he may levy an additional $200 billion in tariffs on China. China responded that it would take further retaliatory measures, possibly including more tariffs on U.S. goods, letting its currency depreciate, or even selling off billions of Treasury bonds. The Trump administration appears to be flying by the seat of its pants with no plan for how to address the possibility of a recession, the higher prices consumers will pay, and the resulting losses of millions of American jobs. Further, reports indicate that while the Federal Reserve is concerned about the possibility of a recession resulting from a trade war, it does not have the tools necessary to combat such a self-inflicted disaster. As each day brings another announcement of jobs being eliminated or shipped overseas and consumers paying more for goods, what are you doing as Treasury Secretary to prevent further harm to our economy from the growing trade war? I know that you have attempted to answer this when the chairman, questioned you about it, but I want to hear more in depth about how you're thinking about this and what you plan to do if there is further harm to our economy.
Thank you very much. First of all, I've noted the nail company, and I will reach out to the Secretary of Commerce to see if that company is subject to some type of exemption, because obviously we don't want companies losing jobs. As it relates to Harley-Davidson, I've previously publicly commented on this. I think the President has been a huge advocate of Harley-Davidson. I think it's unfortunate that they're talking about moving jobs. My sense is that this was before tariffs. I will comment specifically on China because I personally have been very involved in China. I've had multiple negotiations with them. Our objective is to create a level playing field for our companies to stop forced technology transfer. We put a modest amount of tariffs on China as a result of technology transfers. China reciprocated. Our tariffs were less than 10% of what they shipped. They matched that dollar for dollar, and the President threatened if they did that he would retaliate, and we're now in a comment period on the $200 billion. And again, I would just assure you, we very much are monitoring the impact on the economy of all these different issues.
I want to thank you for that, but I want to get back to Harley-Davidson because this is something that the American public really understands. They understand very, very much that Harley-Davidson is a company that we would not like to see export overseas. So you kind of mumble that the tariffs had nothing to do with them moving, exporting jobs overseas. What did you just say?
So first of all, let me apologize if I mumbled. I'll try to be clearer. First of all, in all fairness, I have not spoken to the Harley-Davidson people direct. I know that the president has spoken to them. I can tell you, as I've sat in meetings with the president, other leaders, he always talked about tariffs on motorcycles and cutting tariffs on motorcycles. My sense is that Harley-Davidson had previously planned on moving some of this manufacturing, and it's not just a result. But in all fairness, I have not spoken to them direct. But I share your concern very much of any jobs being moved by Harley-Davidson or other people as a result of tariffs.
What will you do to try and get them not to move the jobs overseas?
I am going to specifically reach out to them and find out the details with the Secretary of Commerce.
And are you saying the president's tariffs have nothing to do with them moving those jobs overseas?
I have not spoken to them direct, so
Have you spoken to the president?
Yes, I have.
And what did he say?
Again, the president has been a huge advocate of Harley-Davidson and is very disappointed on Harley-Davidson's.
Did he ask them to stay?
Yes, he did.
And they turned him down?
No, they asked them afterwards, and I don't know the status of those
Thank you. I yield back the balance of my time.
Gentlelady yields back. The chair now recognizes the gentleman from Kentucky, Mr. Barr, chairman of our Monetary Policy and Trade Subcommittee.
Mr. Secretary, I certainly support the administration's objectives to promote fair and reciprocal trade, but since we're on the topic, I'll stick with the topic for a little while. I do appreciate your testimony that you and the administration continue to monitor the impact of tariffs, but I do have concerns that tariffs and retaliatory measures on American industries could very well suppress or even reverse the record level of growth and job creation we've seen under your leadership and the president's leadership and the booming economy. As we've discussed, my home state of Kentucky's signature bourbon and distilled spirits industry accounted for more than $450 million in exports worldwide in 2017. Of that, nearly $200 million was exported to EU countries, where the market for bourbon has been growing at record levels in recent years. An extended trade war would not only harm that iconic industry, but also Kentucky's farm families, suppliers, tourism, and ultimately consumers through higher prices and limited availability. Similarly, our companies and workers in the auto industry are facing steep international competition for jobs, sales, and innovation that has been intensified by the ongoing tariffs. Toyota's 30-year-old plant in my district in Georgetown, Kentucky, is Toyota's largest manufacturing plant globally. It employs more than 8,000 team members who produced more than 550,000 vehicles and 650,000 engines last year. Toyota has told us that the tariffs have negatively impacted their supply chain. For example, the price of rolled steel is up 40%, and the current price increase for engine and transmission parts is closer to 20%. I know that you, Mr. Secretary, and the President fully appreciate that neither Toyota Camrys nor bourbon implicate national security. But I do want to ask you, does the administration have plans to mitigate the negative impact of retaliatory tariffs and ongoing trade negotiations that it has on American jobs and industries?
First of all, I appreciate those specifics, and I am familiar with them. I think, as you know, the President is in Europe. He just concluded meetings yesterday with several European leaders and discussed trade. That was a very significant issue. There is a planned meeting with the EU later in the month. Again, we are very focused on the retaliatory measures and resolving them.
Well, thank you. And again, we do want to hear more about your plans to mitigate the negative impact that these retaliatory measures are taking. So please stay in touch with us on that. Switching gears to North Korea really quickly. By all accounts, the Singapore summit was successful, but we are now hearing that North Korea is actually in the process of expanding its nuclear facilities despite the summit. And last week, the North went on to criticize our, quote, gangster-like calls for nuclear disarmament. I appreciate that this administration is not making the same mistake as the JCPOA in upfront sanctions relief, but I do want to ask you and for some reassurance about us not taking the foot off of the sanctions pedal when we continue to hear this kind of belligerent rhetoric from the North. And in answering that question, I just remind you that this committee produced the Otto Warmbier North Korea Nuclear Sanctions Act. That bill passed the House 415-2, and it's over in the Senate. And that represents the toughest economic sanctions ever directed at North Korea. Can you use that legislation as leverage to continue to focus that maximum pressure as we continue to negotiate?
First of all, let me just say there are no plans to loosen up on sanctions, anything quite the contrary. The sanctions have been very effective. As regards to the legislation, we appreciate your efforts. We have tremendous tools at our disposal right now. I'm not going to comment on some of the specifics that you've said about what North Korea may or may not be doing. I can assure you I have the utmost of confidence in Secretary Pompeo. I think there's nobody better to be leading this effort for the administration. We speak regularly on the specific status, and I would just say don't believe everything you read in the press.
Well, thank you. And finally, on Iran, is the administration on track to have sanctions fully reimposed by the November deadline? And what role do you see for Congress in the process of implementing sanctions with respect to the new policy towards Iran?
Again, I think, as you know, we are enforcing the maximum sanctions on Iran. They've been very effective. I have had many discussions with my European counterparts. There are a few situations where we will have modest wind-down periods and other things, but we expect compliance with the sanctions, and we've made that very clear, and many European companies have already done that.
Thank you.
Time of the gentleman has expired. The chair now recognizes the gentlelady from New York, Ms. Velasquez.
Thank you, Mr. Chairman. Secretary Mnuchin, following the 2008 financial crisis, we learned that banks and mortgage companies engage in deceptive marketing practices and provided fraudulent information to home buyers in concerted effort to disguise a mortgage true cost to home buyers. These dishonest practices fueled the subprime mortgage crisis, which helped drive the broader financial crisis, which brought the world's financial system to the brink of collapse. Just a few years ago, we also learned that Wells Fargo fraudulently opened more than 3 million customer accounts in order to inflate their cross-selling business and increase their bottom line. Most recently, it has been reported that UBS executives, both in Puerto Rico and here on the mainland, purposely withheld and disguised the true risk of Puerto Rican government bonds that UBS packaged into mutual funds and sold to residents on the island, wiping out $10 billion in retirement savings. So, Mr. Secretary, my question to you is, in your role as both Secretary, Treasury Secretary, and Chair of EPSOC, do you believe that fraudulent and deceptive actions practiced by financial institutions could pose a threat to financial stability?
Thank you. I do not believe that they could pose a threat at this point to financial stability, although I do acknowledge there are some very specific cases which the regulators are dealing with of improper practices.
Do you believe that fraudulent and deceptive financial practices should be criminally investigated and, if necessary, prosecuted by the Department of Justice?
Not my role to comment on prosecution, but definitely I believe that if there are rules broken or anything else, the regulators should be responsible for dealing with that.
If we know that executives knowingly committed financial crimes or covered them up, They should do the time, don't you?
I mean, again, I would just say my role in FSOC is to deal with the regulators. I'm not commenting on, obviously, it's DOJ's responsibility to enforce the laws. That's not within my purview, but.
On Tuesday, President Trump imposed a second round of tariffs on the additional $200 billion of Chinese goods. This led financial markets to tumble all day Wednesday. The Dow opened more than 100 points lower and continued to fall throughout the day, losing almost 200 points at market close. So, Mr. Secretary, media reports indicate that high-level talks between Chinese officials and the Trump administration on tariffs and trade have ground to a halt. Do you believe that talks will be reopened, and do you plan to participate in those discussions?
Yes, I plan to participate. Second of all, I would say, to the extent that the Chinese want to make serious efforts to make structural changes, I and the administration are available anytime to discuss those. As it relates to the $200 billion, I would just comment that had been previously announced. All we did the other day was announce the list, which is now out for public comment and review.
Are you back, Mr. Chairman?
Gentlelady yields back. Chair now recognizes the gentleman from Missouri, Mr. Lukemeyer, Chairman of our Financial Institutions Subcommittee.
Thank you, Mr. Chairman, and welcome, Mr. Mnuchin, Secretary, up here. I'll give you a little respite from the trade talk here. I've got a couple other questions with regards to guidance, de-risking, and harmonization. So, with regards to guidance, over the years, a large amount of agency guidance, handbooks, and circulars have been issued. Almost none of it has been withdrawn or rescinded. Almost none of it went through notice and comment rulemaking or was submitted to Congress pursuant to the Congressional Review Act. I recently sent a letter to the federal financial regulators asking them that they issue directives affirming that agency statements, including guidance, that haven't gone through the notice and comment rulemaking do not establish binding legal standards. I've asked this question of Chairman Powell and Comptroller Otting, among others. So, do you agree with your colleagues that guidance is guidance and rules are rules?
I do.
As Treasury Secretary and head of FSOC, would you consider such an affirmation be included on future guidance coming out of your department, agencies you oversee, and FSOC?
Again, I assure you that we will address this at the next FSOC meeting and discuss it. I don't think we need guidance coming out of FSOC, but we will review that with the regulator.
Well, my hope would be, Mr. Secretary, that you would take the lead in having some sort of harmonization with all the agencies with regards to guidance. And with the guidance that's issued, whenever a guidance is issued, say something in there to the effect that this is guidance, it is not a rule, that guidance is something punitive action can be taken on because it's guidance, it's best practices, it's a suggestion of how a bank should be doing something versus a rule that says you will do this. And I think it's important to be a distinction there, and it's important that I think in your position as head of XOP that you could take the lead in harmonizing all this across all of the agencies, financial agencies, to be able to make this happen.
I've always believed there should be consistency across the regulators, so that is an issue we will address with them. Thank you.
I appreciate that very much. With regards to de-risking, 2 weeks ago, Congressman Clay and I sent you a letter on de-risking following a hearing that we held in the Financial Institutions Subcommittee. Our subcommittee has held several hearings on the issue and heard from a variety of stakeholders. What we've learned is that this is not only a domestic problem, but an international one. We're talking about an entire geographical region losing access to financial services and being cut out of the most regulated financial sector in the world. According to testimony given a couple of weeks ago, it's the regulatory regime, namely BSA, MLL, that's driving this dangerous trend. And the problems go beyond banking. Right now, it's impeding the flow of humanitarian aid across the globe. We've passed bipartisan legislation on Operation Choke Point, and the regulators tell us that it isn't happening. But every witness, Mr. Secretary, that we had before the subcommittee that day told us a different story, as have our nation's financial institutions and their customers. Number one, are you familiar with the letter? Did you see the letter that we wrote to you with regards to this?
Yes.
Does this trend alarm you, or are you concerned about it? Do you recognize that there's a problem?
It is something we think there is an issue with. We are looking at BSA reform, AML reform. We need to strike the right balance on that. I'm not aware of any humanitarian aid that hasn't gone through as a result of this, but BSA reform is something we are studying carefully, and the de-risking issue is something we share your concern and we're looking at.
You know, when the IMF actually is concerned about de-risking, that raises some alarm bells for me, because they're not necessarily on the cutting edge sometimes of regulatory oversight, but I appreciate your comments, sir. Obviously, I couldn't let this opportunity go by without discussing the customer due diligence rule. We've had some concerns about that. As you well know, the BSA ML bill that we're talking about, we're trying to find a way to deal with beneficial ownership. We're looking for guidance from you. Would you be willing? I know we've talked about this in a number of settings already and tried to set up meetings, and hopefully we'll be able to get that done. We want to get a commitment from you to continue to work on that issue.
Yes, you have our commitment to continue to work on that issue.
Do you have any suggestions today for us?
I have no suggestions today for you other than I've shared in the past.
Mr. Secretary, I appreciate your comments today, and I know that this is an issue that is paramount with a lot of the banking industry. Those folks have become basically deputized law enforcement officers, and you know, with some punitive outcomes if they don't do this, and they don't need to be in the middle of this. So we want to really sincerely work with you, try and find a way to get this situation resolved. I appreciate your comments. I yield back the balance of my time to the chairman.
Gentleman yields back. Chair now recognizes the gentleman from California, Mr. Sherman.
Thank you, Mr. Chairman. We in the United States have a good problem. The economy is good, so we have to fight over who gets the credit. The facts are these. Dodd-Frank stabilized the financial system, and coincident with its effective date, we have had a massive economic expansion that has produced 17 million new jobs. Of those 17 million new jobs, 15 million occurred during the Obama administration, and 2 million occurred under the Trump administration. That's 15 million under the Obama administration, 2 million under the Trump administration. Now, this committee has seen a lot of charlatans in the financial services world, but we haven't seen one quite this as bad as what I'm going to say. Yes. You go to a consumer and you say, we're going to give you a $500 bonus, no, a $1,000 bonus. Right here's the check. And then you fail to disclose to them in any way they understand that you're going to slap a $34,000 mortgage on their house. If any charlatan had done that, this committee would have nailed them. But that is exactly what the tax bill does. People are told they got a $1,000 bonus. A few of them did as a result of this tax bill. Some only got $500, most got nothing. But what wasn't mentioned was the $34,000, which is the share of the average family of five of the increase in the national debt. As to trade, Mr. Secretary, I'm going to send you the transcript of the hearing we did yesterday in the Asia Subcommittee. I'm going to be perhaps the one person in this room that says that Mr. Trump's focus on China has been a little too late, a little too hesitant, and a little too weak. We gave China MFN most favored nation status in the year 2000. When that happened, 2/3 of Democrats voted no. Now, Wall Street trotted out some economists who said that the increase from that MFN bill would only be, the increase in the trade deficit with China would only be $1 billion a year. 2/3 of Democrats were right. The Wall Street economists, bought and paid for, were wrong. They were off by a factor of 25,000%. And so I would hope that, and we have a chart behind you that shows the massive increase in the trade deficit with China since the beginning of this administration. But I do not think that anti-Trump Democrats, and on most things I'm anti-Trump, should change our position. 2/3 of us were right 18 years ago, and we are right today, and MFN should be provided to China only in the context of fair and free trade. Now something far less controversial. I want to thank you for your last appearance here. when we talked about the U.S.-Armenia tax treaty. You made a commitment then that you'd have at least one tax lawyer spend 28 hours on the project, and that work has not begun, and it's not your fault. The Armenian government has had a lurch toward democracy and transparency that many of us applaud. Things are in a little bit of a state of tumult still in Yerevan. I'm assured that when things calm down, the Armenian government will approach us committed to the kinds of transparency that our model tax treaty calls for, and then I'll hold you to the 28 hours. As a matter of fact, that 28 hours was based on the fact that 28 members of Congress have asked you to do that. It's now up to 31, so I may ask for another 3 hours. Marijuana, legal in a lot of states. I hope that you would act so that the activities of the Treasury Department don't mess up the economies of those states, whether it be large amounts of cash being moved around, very dangerous to society and an invitation to crime, or the risk to land title, where people say, well, maybe I don't own this property because maybe 10 years ago it was used for marijuana and the federal government might seize it. In the insurance area, the International Association of Insurance Supervisors is continuing to pursue insurance capital standards that seem incompatible with the U.S. system of state insurance regulation. And I hope that you would answer for the record how you will ensure that the U.S. state-based regulatory system will be protected in the negotiations. And I'll have another question for the record on mutual funds, and I yield back.
Gentleman yields back. The chair now recognizes the gentleman from Michigan, Mr. Huizinga, chairman of our Capital Markets Subcommittee.
Thank you, Mr. Chairman, and I am sure, Secretary Mnuchin, you are encouraged as well as I am by my colleagues' newfound concern with our debt situation, especially in light of a $1 trillion-plus deficit spending that had happened under the last administration on an annual basis. And I hope these same colleagues will have that same enthusiasm to tackle the entitlement situation that we have here, so we can actually have a safety net system that will exist for future generations. So that's where we need to focus and concentrate on. But I want to hit on a couple of things. One very briefly here on the Volcker Rule. I need to take this opportunity as chair of that Capital Markets Subcommittee to do that. Then I want to talk a little bit about China and our debt with China and some trade. So recently, last month, the Treasury announced that the 5 federal financial regulatory agencies dealing with Volcker had come together and had proposed some changes to ease compliance while still implementing Section 619 with the 60-day comment period. You said, quote, the 5 agencies responsible for regulation of the Volcker Rule coming together on this notice is an important first step. And I'm wondering, could you explain a little bit about how these reforms help address the Volcker Rule so that compliance can be streamlined, rules clarified, and markets can be made more efficient?
I think on the Volcker Rule, it's all about providing more clarity on and making sure that the appropriate people can properly execute the rule. So I think there was a lot of ambiguities. Some people refer to you should have a lawyer and a psychiatrist to interpret it. But this is about, we want to make sure it can be enforced, but it can be enforced clearly.
And what are the next steps Treasury is exploring to help appropriately tailor the Volcker Rule?
Well, this is now, we had a series of suggestions on this in the executive report, but this is now being led by the regulators and is being executed by them.
Turning to China, obviously China has a very large chunk of our debt. It's somewhere in the neighborhood of $1.2 trillion, $1.2 trillion that China directly controls. Do you have any sort of fear that they could use that as an alternative trade weapon? And if so, are there any kind of contingency plans that have been established as countermeasures if that were to happen?
Well, I would just comment to a large extent, a big component of the reason why they have that debt is because the giant trade deficit and them reinvesting that cash. I have no reason to believe that that's of a concern to the market at this point. The market is very liquid and has a lot of depth, but that's something we'll continue to monitor.
I appreciate that. Well, and I, like some of my colleagues, I know Mr. Barr and others have expressed their desire to push for better, fair trade deals. I would join that sentiment as well. But we do know that sometimes victory comes at a heavy price, and I wanted to explore a couple of things real briefly with this. I chair the U.S.-Canada IPG, the Interparliamentary Group. It's the official exchange between the U.S. Parliament and the U.S. House. And I can tell you our Canadian allies and friends, neighbors, trading partners are genuinely confused about why Section 232 was used to designate some of the tariffs on that. And what are you telling your colleagues internationally about this?
I've had very direct conversations with many of my colleagues on this, specifically the Canadians. I don't want to go in detail in this setting, but I can assure you we've had very detailed discussions. I am on my way to Mexico tomorrow with Secretary Pompeo, and obviously NAFTA is a big focus now that there's the elections there.
I'd like to maybe explore this offline with you, and while I commend the goal, I'm afraid that there may be some actions trying to recapture a world that frankly no longer exists. The largest trading partnership in the world is U.S. and Canada. The sixth largest trading partnership in the world is the state of Michigan and Canada, a lot of that surrounding autos, office furniture, and agriculture. And what we are seeing here is an integrated supply system that has parts for vehicles traveling back and forth across the border, sometimes 9 different times, and thousands of parts doing that. So we have to be very careful with that, and I look forward to our conversation. Thank you. I yield back.
Time of the gentleman has expired. The chair now recognizes the gentlelady from New York, Ms. Maloney, ranking member of our Capital Markets Subcommittee.
Thank you, Mr. Chairman, and welcome, Secretary Mnuchin. The last time you testified, I asked you about beneficial ownership, and you said you wanted more time to look at it. I think it's a critical challenge before our country. I introduced a bill at the request of really law enforcement that said they would track money and terrorism and drugs and guns and hit an LLC and not know who owned it. They just want to know who owns it so that they can protect us better. And the best time to do it is when they are filing. We have a bill in, many of us in a bipartisan way are supporting it, that this information would be available to Treasury, kept at state level if they so wished, and also law enforcement. And I live in a city, New York, that continually faces terrorist threats, and there are no threats unless there's financing. So cracking down on terrorism financing is critical, and I now want to know that since you've had a chance to look at this, and in light of the testimony that the FinCEN director gave recently, that he believed companies should be required to disclose their beneficial owners at the time that they are formed and they are a part of Treasury. So I'd now like to ask you if you've had a chance to look at this and what is your feeling now on supporting beneficial ownership and having this information available to Treasury and to law enforcement.
So first of all, let me just say I fully support that it is a very important issue, and we need to be able to figure out an efficient and prudent way that we have access to beneficial ownership. I wish I could tell you I already had this solved. We are having a lot of discussions. We look forward to continuing this discussion with you and members of the committee to find a solution. We need an appropriate solution to this.
Well, thank you. And as you know, our committee has been discussing legislation to reform the Bank Secrecy Act and anti-money laundering rules. And I believe that any legislative package on this issue must address the issue of beneficial ownership, because anonymous shell companies are routinely used to finance criminal and terrorist organizations. So do you believe that a legislative package to strengthen our anti-money laundering rules should address the use of anonymous shell companies by criminals and terrorist organizations?
As I've said, I believe this issue needs to be solved, whether it's solved as part of BSA or whether it's solved separately. These are both very important issues, but we do need to be able to have access to beneficial ownership information for law enforcement and for combating terrorist financing.
Well, also in February, Treasury, you released a report recommending that we keep Dodd-Frank's orderly liquidation authority for winding down large financial institutions as an emergency option. And I agree with you, and I want to thank you for that report. The report also recommended changes to the orderly liquidation authority, and if there are changes that need to be made, I think we should have that discussed because I strongly oppose repealing this authority. Can you discuss why you think, as your report stated, that the authority is a far preferable alternative to destabilizing financial contagion or ad hoc government restructuring or bailouts?
So I think, as you know, this is an issue we reviewed very carefully, and we do support keeping it. I look forward to speaking with you about some of the specifics of the changes that we would recommend. They would require legislation.
Thank you. I look forward to those discussions. And finally, as chairman of the Financial Stability Oversight Council, in that capacity as chair, what do you see as the biggest risks to the financial system right now?
Well, I think the good news is, from a capital and a credit standpoint, that's not of a major concern. I would say the issue that I focus on at the moment of most significance is cybersecurity, and I'm not implying in any way that there is a cybersecurity risk, but this is the area that we need to continue to invest in. We need to continue to have public-private partnerships, and I'm very focused on the safety and security of the financial infrastructure.
Thank you. I yield back.
Gentlelady yields back. Chair now recognizes the gentlelady from Missouri, Ms. Wagner, Chair of our Oversight and Investigations Subcommittee.
Thank you, Chairman Henseling, and welcome, Secretary Mnuchin. Secretary Mnuchin, according to the most recent numbers provided by the United States Trade Association, Missouri exports support some 88,000 jobs in 2016, totaling $13.9 billion worth of goods. That's why earlier this year I joined many of my colleagues in urging the President to rethink his tariffs on steel, aluminum, and other goods. The retaliatory tariffs levied by Mexico will absolutely be felt in my home state of Missouri, which I noted earlier depends heavily on trade. My constituents are concerned that, as am I, that these tariffs will have a serious impact on our state and will create winners and losers in communities across Missouri. Mr. Secretary, as I mentioned before, some of these tariffs have targeted our allies. Can you describe in detail the expected end game for these trade actions, and what is the specific time frame you expect for these policies to achieve their desired effect?
Well, first of all, let me just comment. I share your view that exports create enormous job opportunities. So our overall view is we should be doing things to make sure that our companies can fairly compete and export fairly into these markets. We were in, I put these in different buckets. There's obviously the NAFTA-related issues, there's the EU-related issues, and there's the China-related issues. As I mentioned, this is something we meet with the President on weekly. The economic team is very focused on all of this.
Time frame?
I can't commit to a specific time frame, although, as I previously mentioned, NAFTA is now a big priority since we have the Mexican election behind us.
Mr. Secretary, I wanted to take a second to focus on China. In 2017, growers in the United States sold nearly 1/3 of their soybean harvest to China. The recent Chinese tariffs on American soybeans will hit Missouri hard, and already have. Reports of farmers are expected to sell their crops at a loss. What would you say to my constituents that will be directly impacted by the President's actions on trade, especially vis-a-vis my farming community?
I can assure you I never was an expert on soybeans, but I've now become an expert on soybeans. I follow this market daily. I can assure you that we're focused on this. We are in discussions with Secretary Perdue and others about this. As I said, this is an unfortunate impact of what we're trying to do is get free and fair trade with China, and they have unfairly targeted specific markets, and that's not coincidental.
No, it's not coincidental, and it's causing real harm in present day to the farming community and the soybean farmers in my home state of Missouri.
And I can assure you I and the President understand that, and we're focused on that.
If trade relations with China remain strained, commodity producers in Missouri will need to find new markets, Mr. Secretary, for their goods. ASEAN countries seem to be natural trade partners. Over half of U.S. congressional districts export more than $100 million in goods to ASEAN every year. ASEAN countries themselves wish to see stronger trade relations with the U.S. If U.S.-ASEAN trade relations become more formalized, whether that's multilateral, bilateral, whatever it is, Mr. Secretary, would China be, I think, pressured to institute fair trade practices? I'd like to make sure that I do put in a plug that we enter into some of these bilateral or a multilateral with ASEAN countries in order as an opportunity to have new markets for my farming and ag community and others in the district. China's ascension, Mr. Secretary, to the World Trade Organization has done little to change its predatory trade policies. Mr. Secretary, how can the World Trade Organization be restructured in your thoughts to better restrain China's behavior?
That's a complicated issue that I don't have time to go through now. I'd be happy to discuss that more with you. Ambassador Lighthizer is really the expert on this. I would say, again, the rules-based system is okay if the rules are being followed. The problem is that, as you've outlined in the case of China, they are not following many of the things that they've
and they subsidize everything, Mr. Secretary. There are two kinds of companies in China, those that are owned by China and those that do everything China says. So we're going to have to look at some of, I think, those issues when it comes to interstate commerce and such in dealing with the WTO. So I look forward to continuing our conversation. I thank the chair, and I yield back.
Gentlelady yields back. Chair now recognizes the gentleman from New York, Mr. Meeks.
Thank you, Mr. Chairman. Mr. Secretary, good to see you again. Let me just start out with a basic question. Let me just see. If you were a business person and you started, you were on a business, you were buying a business, what would be the easiest way, best way for the business to move forward? If you bought a business that was deep in the hole, or you bought a business that was at level and moving in the right direction? What would you think would be the hardest task for one to accomplish?
I'm not trying to be coy, but that's a little bit of a hypothetical question that there are opportunities in both.
Well, the hypothetical question is, if there's something, if you got a company that is deep in the hole, going in the wrong direction, problems all over the place, as opposed to a company that you're buying that is, they've corrected some of the problems that was in there, they're moving forward in the right direction, things are starting to improve, they're starting to hire people, things are moving in the right direction, which as a CEO, if you came in, I think you were a businessman, what would put you in the best situation?
Again, it's completely hypothetical, but sometimes it's easier to buy things that are broken, and sometimes it's easier to buy things that are fixed. I can't comment on hypotheticals.
Okay. Don't want to comment on hypotheticals. Well, let me not give you a hypothetical. Let me give you a fact. This country, when President Obama was the president, was in deep debt and was losing hundreds of thousands of jobs a month and was in serious problem in the worst financial crises since the Great Depression. That was the situation of this country when Barack Obama was the president or became the president of the United States in 2008. Fact. Fact, not hypothetical. When the stable genius became the president, that's what he calls himself, self-proclaimed stable genius, this country, because over 100 months ago, we were gaining jobs. That's 8 years ago. Moving forward in the right direction, creating jobs. What situation do you think is better for a president of the United States? Not a hypothetical.
Sorry.
That's a fact. Unless you can deny that fact, which the stable genius denies all the time, different facts. Now, let's move forward. Because I'm concerned about what I saw today at NATO and at the G7. Because you would agree that we are more interconnected today as a world than ever before. Is that not correct? That's not a hypothetical either, is it? Or isn't it a fact that we're more interconnected as a world today, Mr. Secretary?
More relative to when?
To any other time in our history.
I don't know if we're more. We are interconnected.
Well, with technology, are you denying with technology today and the way that our trade system works and all of the things that are moving around the world and how fast things are, we are not more interconnected today than we were ever?
Again, we are interconnected, so I'm happy to answer other questions.
So when were we more interconnected?
More is a relative issue. I don't know if we're
Are you a stable genius, Mr. Secretary?
I'm sorry, what was the question?
Are you a stable genius?
Am I a stable genius?
Yes.
I'm stable, and I won't refer to myself as a genius one way or another.
I'm just trying to find out because I know sometimes working for a stable genius I'd like to know how that is. I mean, does the stable genius, and it's not words that I've used, it's the words that he said he is. He said he's a stable genius. Does he listen to you? Because I'm listening to some of my colleagues, and actually a lot of the things, especially around tariffs, we agree upon. We agree that we're losing jobs. We agree that there are scenarios that's going on that's worrying all of us, Democrats and Republicans. And I'm hearing you saying some of the kinds of things, and some of the administration and some of the people around them might be saying the same thing. So I'm wondering whether or not the president, when you're in those rooms, is he listening to you? Or because he's a stable genius, he just does whatever the heck he wants to do without listening to your advice. Does he listen to your advice?
Yes, I can assure you that the president listens to my advice. He is the president. Sometimes he follows my advice and sometimes he doesn't, which I respect. But I wouldn't be in this job if I didn't think he listens to my advice, and I couldn't be happier with the economic plan we're on.
Time of the gentleman has expired. The chair now recognizes the gentleman from California, Mr. Royce, chairman of the House Foreign Affairs Committee.
Thank you very much, Chairman, and Mr. Secretary. Thank you for being with us. The President offered a laudable goal at the G7 meeting in Quebec when he challenged our leaders to get to no tariffs, no barriers. It's been reported that German automobile makers are open to the idea of zero tariffs. That would certainly be a win if we could de-escalate with Europe on that basis of zero tariffs between us and them. But we've seen little talk elsewhere of this as the end game, and instead what we see is a two-front trade war, one with China, which frankly is not playing by the rules, and another with our close economic allies in the EU, Canada, and such, and our domestic industries and agriculture are being threatened. On the list of targets are bourbon, bikes, blue jeans, and even Mr. Poliquin's beloved Maine lobsters. So could we do a reposition in a different direction here? Because zero tariffs, for example, if we looked at autos, would be a victory for free trade and fair trade and maybe get us in a position where our allies are on the same page. And when we talk to our allies in the EU and our largest export market, Canada, are we reiterating zero tariffs as the goal? I would think that that might be a first and second option in order to try to advance a way to get us together.
We are advocating no tariffs, no tariff barriers, no subsidies. It's a package altogether. We are advocating growing exports for U.S. companies so they can compete fairly. And if we have fair trade, we will increase exports significantly, and we won't have the outsized trade imbalance that we have.
And I think that outcome would also give us a position with our allies where if we can set high standards, we can then maybe do something collectively to discuss the problem with Beijing's lack of following the rules. But the other thing I wanted to ask you, and this is something that Blaine Lukemeyer brought up, and he and Steve Pierce and I have talked about, it's this fact that criminal organizations are infamous for using anonymous shell companies, both foreign and domestic, to open bank accounts, to launder money, to perpetrate fraud, and frankly, now to finance terrorism. And this is an area where the United States, frankly, and Kenya have not been front and center in terms of doing something about beneficial ownership. There was a 2016 Financial Action Task Force report that found the U.S. had an absence of any measures to ensure that there was adequate, accurate, and timely information on the beneficial ownership. Would you agree that this is a vital issue where we should work together and work in a bipartisan way to move something quickly?
I would indeed, and I actually just wrote that down. We got to figure out this beneficial ownership in the next 6 months. I don't want to be coming back here next year and don't have this solved. So we need to work with Congress on a bipartisan basis on this.
Thank you, Mr. Secretary. And lastly, in recent months, the administration has twice raised concerns about recent legislative action on international insurance matters. First was in a memo from the Department of Justice raising constitutional concerns that H.R. 4537 would, in their words, contravene the President's exclusive authority over the conduct of diplomatic relations. I'll just share with you, I'm concerned that such actions would limit the flexibility of the Treasury Department to lead international negotiations on financial insurance standards and potential future covered agreements, and I think the results of that could be quite negative. I just ask if you share those concerns.
I'm going to follow up with you on the specifics of those offline, but thank you.
Well, thank you very much, Mr. Secretary, and Mr. Chairman, I yield back.
Gentleman yields back. Chair now recognizes the gentleman from Massachusetts, Mr. Lynch.
Thank you, Mr. Chairman, and the ranking member. Mr. Treasurer, thank you for being here. I want to follow up on Mr. Barr's line of questioning about sanctions. And obviously, as a result of the President's withdrawal from the JCPOA, we're going to have to, well, you're going to have to reinstitute sanctions against those companies, banks, and countries that continue to do business with Iran. So, and that includes some of our closest allies, our national security partners, and countries that are co-signers of that agreement, including Great Britain, Germany, France, the EU, Russia, and China. Earlier in your testimony, you said you have frequent conversations with China. Is China going to reinstitute the ban on importing oil, Iranian oil to China? They're the largest single purchaser of Iranian oil right now. Have they agreed to join our sanctions?
Again, I think it would be inappropriate for me to comment on this.
Well, I think it would be entirely appropriate. It's the ball game right here.
But I will tell you, it is
the largest single purchaser of Iranian oil is not part of this deal, then those sanctions are meaningless.
No, what I was going to say is I think it would be inappropriate for me to comment on specifics of a conversation, but what I will tell you, it is our intent to enforce sanctions on Iran-related oil against everybody, including China.
Right, and so we're in the middle of a trade war with China. I'm asking you whether they're going to join us.
Again, we intend to enforce sanctions on them, on Russia, on Europe, and others against Iranian
wait a minute.
oil.
The sanctions against Iran is going to raise the value of Russian oil. So by withdrawing from the JCPOA, you're helping Russia. there goes your sanctions against Russian oil. This is going to be a windfall for Russia. They're going to do much better now because they'll be a much important source of oil in that region. So they're going to, I'm sure, be the big winner, and I think the American consumer with higher gas prices will be the big loser, quite honestly. I think that's the natural consequences of that. Now, Treasury, and importantly OFAC, the Office of Foreign Asset Control, is the department within your Treasury that is really keenly responsible for this, although obviously you're going to have to work with Secretary Pompeo and State Department to reinstitute these sanctions, right?
That's correct, and we've already activated that plan.
Okay. Well, in terms of having, first of all, you only got about 200 people up at OFAC. They're very, very hard-working, but with all this extra work, I'm very concerned whether you have the resource to do this. You just lost your top 3 people that do the sanctions work. They just left. They just quit. So your reassurances to Mr. Barr, I don't think, are well-founded. The other problem is on State Department. So we've got to work with the host countries to make sure that the sanctions are observed. So it would be ideal if we had an ambassador in Saudi Arabia, for example. But we don't have one. None has been nominated. We don't have an ambassador or a nominee. The president hasn't even nominated anybody. Nobody in Saudi Arabia. We have no ambassador in Turkey. I was just there a couple of weeks ago. I was in Jordan a couple of weeks ago. We don't have an ambassador in Jordan. We don't have an ambassador in Egypt. I was there like 3 weeks ago. Mexico, you'd think we would need an ambassador to Mexico with everything we got going on with the immigration at the border, plus NAFTA. You'd think we might get an ambassador to Mexico. Qatar, another key country. Australia, Azerbaijan, another key source. If we're going to try to shut down oil shipments, there'd be good people to talk to. We don't have an ambassador in Qatar, Australia, Azerbaijan, Georgia, Somalia, Libya, Tajikistan, Panama, Venezuela, all key countries. If we're going to ask people to join us in these sanctions. I mean, you just said earlier that you have weekly meetings with the president. Ask him to pick a few of these 20 or so countries and appoint an ambassador so that your Treasury personnel, OFAC, that do a wonderful job, very hardworking people, can actually work with, and your Treasury liaisons. You need a few more of those. You got some members over there, some Treasury liaisons that work with FinCEN that are handling 4 and 5 countries in the Middle East. We got a lot of work to do, and I don't buy the reassurances that these sanctions are going to go like you think they are.
Time of the gentleman has expired. The chair now recognizes the gentleman from New Mexico, Mr. Pierce, chairman of our Terrorism and Illicit Finance Subcommittee.
Thank you, Mr. Secretary. Thank you for being here. Thank you, Mr. Chairman. So the discussion on the oil is one that is especially timely. The U.S. is just right now, in the next month or so, in the position of overtaking Saudi Arabia as the #2 producer. Will surpass Russia in the very near future. And all of that is occurring because Republicans actually put into a bill in December of 2015 the ability to export our oil for the first time in 40 years. That's allowed an unprecedented expansion into fields that were before probably not really economic. So again, I compliment you on the stances of the administration with regard to energy. That energy revolution is taking place in my home county and the county right next to it, so that many of the entry-level workers are making $100,000. So the administration's policies of the Tax Cuts and Jobs Act, along with this energy export, is revolutionizing the world market on oil. And if we will continue to allow that export, then we're going to replace a lot of those foreign countries who they've had just free range in the export market. So again, Mr. Secretary, I appreciate that. My main questions have to do with CDD and its implementation. You're aware of the TIF subcommittee's discussions on beneficial ownership. Mr. Royce just mentioned those. When the CD rule was implemented, then banks began to say, we don't know exactly how to respond to this, and so they were being told, okay, we got a couple of facts out, but really no guidance. Is there any idea when we'll have more specific guidance on the CDD rule?
I don't have the specifics of that, but I'll look into it and get back to you.
Okay. Now, when Director Blanco was here in front of the committee a couple months ago, he said that really they weren't worried too much about compliance right now in the CDD rule, that it was implementation. Is that a full agency position, or is it just him trying to manage the affairs under his purview? Is that a broader directive or something that he's just working out?
I think, as you know, it's a multi-agency issue, but that's not a directive for me.
Okay, that was what I was trying to come up with. Now, again, you just mentioned that your full intent is to get back with us in the next 6 months and try to figure out in a bipartisan way. If we could accelerate that time, if we could accelerate the meeting, we really have the BSA reform bill is ready to go except for this one piece, and we keep bouncing back and forth between the two sides on that, because we in the country really don't have our minds clearly made up. We see the effects of not having the beneficial ownership, and we then become one of the key places that shell companies come to operate because they know that we're in conflict on this. The other side worries about too much information in the hands of the government. Have you wrestled with this any at all, sort of in your approach to it? Are you still leaving that to the Fenton level to try to work it out?
No, I've been actively involved in discussions, and I'm going to ask the chairman to set up a meeting with the appropriate people on the committee. As I've said, there are different solutions. There's not a perfect solution, but I do believe we need to solve this and move on.
I would agree wholeheartedly. It penalizes legitimate businesses when the shadow companies, when the shell companies can come in and operate and launder money. I mean, right now in the oil field, have a lot of companies come in and they compete mercilessly with cash that's not generated from legitimate operations, and it takes away from the strength of the local business community. Now, when you testified before us about a year ago, you said about 50% of your time was used on cyber crime, on cyber finance, terrorism financing. Is that still true? Is it still the pushing wave?
It is.
It's something that we wrestle with in the TIF subcommittee. We just plan to continue to work with you on it again. Appreciate your leadership. It's always been steady, and Segal has just been good to work with, and so the stability of the agency is something that I appreciate from my perspective. The rising wage market, rising employment markets, those are things that all America is in awe of right now. The growth rate projected by the Atlanta Fed last month is just phenomenal. So again, Mr. Secretary, thanks for your work. Yield back.
Gentleman yields back. Chair now recognizes the gentleman from Georgia, Mr. Scott.
Thank you very much. Welcome, Mr. Secretary. Mr. Secretary, the people of this nation are very worried. They're very concerned about this trade war. Make no mistake about it. Both Democrats and Republicans are very much worried about it. Now, I really want you to listen very carefully to me, because there is no state that could be so devastatingly impacted on this than my beloved state of Georgia. Let me explain to you how. Let's take the fact that poultry, for example. Georgia is the leading producer of poultry in the world. And according to our National Chicken Council and leading chicken producers like Tyson's Food, they've informed me that in 2014, for example, U.S. chicken exports to Mexico, one of our most important markets alone, totaled $800 million. But during the same period, Mr. Secretary, Brazil's exports went up from $50 million to $200 million. If we continue to put up these trade barriers in Mexico, it is clear as a bell to anybody looking at this that they will take even much more of the market, leaving American chicken farmers and producers out in the cold. Let's go to another one. Let's take aluminum, for example. In Georgia, we have massive users of aluminum, manufacturers. And it's not just Georgia, but all across the nation. Imagine, go into a grocery store and just look at how much of our food, our beverages, are contained in aluminum cans. Can you imagine the impact that that will have? I want to go to another point, our pecans. Did you know that half of the pecan production in Georgia is exported to China, in which we are in the middle of? And Georgia produces 1/3 of all the pecans in the United States. I want you to have that. I want you to recognize Georgia. I want you to tell the president how damaging this will be to Georgia businesses, Georgia farmers, Georgia manufacturers, and not only that, to the employees. Because when the aluminum manufacturers come in, that's going to be a 1-to-18 ratio in loss of jobs. Now, Mr. Chairman, Mr. Secretary, let me just ask you this. My question is this to you. Are you prepared? Are you ready to be the one who will take full responsibility as the Treasury Secretary in charge when Georgia and this nation inevitably enters into this high inflationary rate? Who's going to pay for this increase? It's the Georgian American consumers going to do that. What about the loss of jobs in manufacturing? It's going to be the American people. You say, well, the economy is moving on all cylinders. I agree with you, but what I'm curious about is the cavalier attitude this administration has of the loss of jobs, of the impact on this, the side effects while we're riding on this sugar high. And so I want to just ask you this question. Are you ready to assume full responsibility of the downside when the darkness comes? Are you ready to take full responsibility?
I am, and I share your concerns. And as I've said, we are not taking this lightly. We are monitoring all these specific issues carefully. We are concerned about the job losses on the areas that you've impacted.
And you understand the real outside impact this is going to have on our people in Georgia. I want to make sure, because we are going to be paying close attention. Now, in the Senate, someone mentioned this, but the Senate passed a resolution 88-11. The resolution was largely symbolic, but it said that there may be and should be an expanded congressional role in overseeing the tariff decisions. And I'm concerned, do you support this?
I do not.
Very good. Thank you, sir.
Time of the gentleman has expired. Chair now recognizes the gentleman from Oklahoma, Mr. Lucas, former chairman of the House Agricultural Committee.
Thank you, Mr. Chairman. Mr. Secretary, I want to raise with you one capital requirement rule that's been the subject of this committee's scrutiny. Mr. Luetkemeyer has a bill of which I and others are co-sponsors, which would offset, for purposes of capital rules, any client margin that is posted to a clearing member. This idea was a recommendation of your department's first report in 2017 and has been discussed in Europe as a regulatory change. As this hearing is about international issues, I would call to your attention a recent Cftc report stating that the market share of U.S. banks in terms of futures options positions has decreased 10% in the last 5 years compared to European banks. While I do think this fact points to a competitive imbalance between us and the Europeans, I'm more concerned about the health of clearing for derivatives. If these data are correct, some capital rules might be hindering the laudable goal and policy of clearing that Congress mandated in 2010. And it will not help markets if capital rules encourage participants to go elsewhere for derivatives clearing. Given that, do you think that the SLR rule needs to be tweaked to offset client margin? And would such a change make sense for purposes of helping clearing in the United States?
It's something we are discussing with the regulators, as you've outlined.
Thank you, Mr. Secretary. And could we turn for just a moment, since trade seems to be the topic of discussion here, and I represent an ag and an energy district, and in both situations, we produce more in my region and generally of those products than we can consume in the United States, thinking of natural gas as well as certain ag matters. The situation that we find ourselves in, that the President and the administration are trying to address, both with China and the rest of the world, would seem to me to be something that has evolved not in the last few months or days or weeks, but literally the positions of our predecessors in Congress and previous administrations starting after the Second World War. Give the world an opportunity to do business with the United States, encourage economic development, capitalism, and democracy will follow. Now, the Europeans have a strong economic system. From the ashes of the Second World War, they've created that, and a strong politically democratic system, a democracy patterns there. Our friends on the other side of the Pacific, while they seem to have understood that communism was not the best economic model and have adopted capitalism, some might even say the old mercantilist version of capitalism, they've not made the political steps forward that perhaps our predecessors have hoped for. But is it fair to say that what the administration is trying to do now is in general reset the trade field for the entire planet in a more equitable fashion?
That's absolutely correct. Free and fair trade.
The old days of giving everyone else advantages in order to help them develop to create a more stable and peaceful world, that's now, that stage is now gone, and it's time to make sure we are treated fair and equitably. Correct, Mr. Secretary?
That is correct.
And when you reorder the entire world, it's not a simple process, correct, sir?
Definitely not.
The battle will be politically and economically challenging. So staying the course is something we need to do?
It is. Thank you.
That said, I was a young wheat farmer when President Carter did the embargo against the Russians, which also led to our boycotting the 1980 Olympics, using agriculture for a political tool on some other issue. But in the industries, all industries in the United States that depend on trade, this is not using us as a tool for some other political goal. This is trying to achieve the survival of those industries for the long haul. Correct, Mr. Secretary?
It's about economic fairness, as you've outlined.
Thank you, Mr. Secretary. Yield back, Mr. Chairman.
Gentleman yields back. The chair now recognizes the gentleman from Texas, Mr. Green, ranking member of our Oversight and Investigations Subcommittee.
Thank you, Mr. Chairman. I thank the witness for appearing as well. I'd like to visit with you about something a little bit closer to home, if I may. As you know, the CRA, the Community Reinvestment Act, was enacted in 1977. And as you know, it was enacted because of redlining, which impacted poor people and minority people for the most part. And as you know, there is now some talk of reforming the CRA to some extent. And it has been recorded that there is a desire to expand the definition of community development. I'm concerned about this, Mr. Secretary, because I have a good many constituents who believe that the CRA should be strengthened to aid more poor people. It seems that there is the possibility of adding business lending, some aspects of business lending, to the CRA such that banks can get credit for business lending. Tell me, where are we currently on the CRA and this reformation that may take place?
Well, first of all, I'm going to suggest that Mr. Rotting comes to visit you to get your views on this. I firmly believe that this is something that we should take a new look at, because I think CRA can help communities much more so than it does. And this is something I was personally involved in from running a bank. I think that Banking has changed, and I think we need to figure out how CRA really can help communities, and I'm going to suggest he comes and speaks to you about that, because I can assure you our desire on changing CRA is not about weakening CRA in any way. It's about making it more effective for communities and making sure that the benefits go to the communities.
Well, I appreciate what you just shared with me, and I look forward to the visit, but I do have to indicate this, Mr. Secretary. A lot of the push is coming from the banks, and the banks are back. The banks are doing quite well. They're making record profits, $167 billion annually over the last 3 years. Profits are up 135% since Dodd-Frank became the law. Business lending is up 80% since Dodd-Frank became the law. And the big banks will receive a $15 billion windfall in 2018 as a result of the tax bill. So I'm concerned that we're overemphasizing paperwork and the notion that the bureaucracy is creating a loss in some way for banks. Banks are doing quite well. And my concern is this: if we change the CRA such that business lending becomes a means by which banks will be able to acquire additional credits, that may harm the lending to poor people, which is what the CRA was envisioned as a means of helping by way of dealing with the redlining that was taking place. So I welcome the visit, but I have to ask you this. Before you enact whatever these changes are, I'd like to visit with you, Mr. Secretary. You are where the buck will stop. I'd like to have an audience with you so that you can know more about how this will impact my constituents. And by the way, I speak for a good many people who are not speaking on this subject, people across the length and breadth of this country who depend on banks being fair. So I beg that you and I would have an opportunity to meet and discuss this. I'm not a person who needs a lot of time. I'm fairly pithy and concise. I don't deal in small talk. I go right to the point. So I think that it would be beneficial for us to have this meeting.
Mr. Green, I'd be more than happy to meet with you. And again, I can give you my personal assurance that this is actually an issue that I've asked the regulators to look at because of my personal concern and experience that the money is not going into the communities where it should be. This is not an effort that is being driven by the banks to avoid CRA. This is about, in my mind, and we look forward to working with you, how banks better serve communities. Thank you, Mr. Chairman.
Time of the gentleman has expired. The chair now recognizes the gentleman from Florida, Mr. Royce.
Thank you, Chairman. Mr. Secretary, I'm over here to your right. Gotcha. Thank you for being here, and thank you for your service to this country. I will tell you, since you have taken office, we have, as a committee and as a Congress, tried to give you tools to do better for our economy, to do better for our consumers. Tax law, we did a little banking light to open up some capital in the community banks and reduce their regulation. There's a lot more we'd like to do, but we're running out of time, and there's a lot you can still do in the Department of Treasury, especially when it comes to housing finance. I mean, we can't forget what happened in '07, and unfortunately, we've not been able to prevent statutorily a recurrence of what may happen in a housing bubble. And I would love to see credit risk transfers being implemented from the private sector to release some of that burden that the government now has in backing these mortgages, but yet we're moving slow. And so we have to rely on you. And in public remarks earlier this year, Craig Phillips, one of your counselors, stated that the Department of Treasury is fully committed to the successful implementation of the single security initiative being undertaken by the FHFA, Fannie Mae, and Freddie Mac. I understand that taxpayers have sunk nearly $1 billion into this effort, and I'd be interested in your perspective on where things stand with this effort.
It is being implemented. It's something we support. But more broadly, I would just say I also support we need GSE reform. This is something that I am determined in the next Congress should be a major focus of ours, hopefully on a bipartisan basis. But we can't just leave these things sitting the way they are.
I couldn't agree more.
As they have been.
And which is why we're relying on your department, I think, to do as much as it possibly can, including the common securitization platform that complements this, that allows for the implementation of this. Do you think that that platform, the common securitization platform, should be available to all market participants, not just Fannie and Freddie?
My strong preference is part of GSE reform that we create a system of competition, that if other people wanted to compete with the GSEs, they could. But obviously that's dependent upon certain changes to legislation.
That we have to make. And it's your understanding that there's plenty of capacity in the market to take some of that, is there not, from the GSEs?
I believe there is, but again, we need an overall solution to this.
And just for guidance, are there any other principles that you think are important that we should be following in order to do an effective GSE reform?
Again, I've said that as part of this, if there's either an explicit or an implicit guarantee, my preference is if there is a need for that, there's a explicit and the government is paid and taxpayers are compensated.
And I think that's reality in government and insurance anymore, unfortunately. But as a last backstop is where we're trying to get government to be when it comes to the guaranteeing. As you know, today there are about half as many companies that are going public than they did 20 years ago. In your opinion, why is that? I mean, is it lack of access to capital, regulatory burdens?
I think it's regulatory burdens, and that's something we look forward to working with you on.
Excellent. And one of the things I want to just close by saying is that, you know, we have probably the best system of regulation when it comes to insurance with state regulators. And as under your direction through FIO, we are negotiating with the International Association of Insurance Supervisors. I think it's important that we deal from a position of strength and that we assert our ability to regulate on behalf of consumers, on behalf of capital requirements and solvency requirements, so that we are not influenced unduly by foreign markets when it comes time to reaching our deals with the IAIS. And for that, if you have any comments, I would appreciate that. Otherwise, I'll yield back the balance of my time.
I think we agree with you and we're comfortable where we are and won't be unduly influenced.
Thank you. Mr. Chairman, I'll yield back.
Gentleman yields back. Chair now recognizes the gentleman from Missouri, Mr. Cleaver, ranking member of our Housing and Insurance Subcommittee.
Thank you, Mr. Chairman. You know, last week I had a meeting in Higginsville, Missouri, a town of 5,000 people in my congressional district in Missouri. I had a meeting of farmers, standing room only. We couldn't get anybody else in the center. Not one person in there believed that this tariff move by the president is good for them. Every 3 rows of soybeans that grows in Missouri goes to China. But I don't blame the president for this. I may be the only person in the country. I don't blame the president. I told them this. I blame Congress. We have allowed over the last 30 years the president, whomever was the occupant in the White House, to gradually take the constitutional responsibility of Congress. From the War Powers Act of 1972, we went on to this. I mean, for example, the president shouldn't have the authority to do this because there's the law 232, the Tax Expansion Act, requires that there's a 270-day period during which we're supposed to be studying the issue, and the president is supposed to be waiting on us to do that. But because the founders never envisioned a compliant Congress, and so what has happened, the president's just snatched power. I never forget, I almost had a nervous breakdown because of anger when President Obama stood up at the State of the Union and said he would sign no earmarks. He doesn't have that power. He doesn't have that power. The Constitution gives the power of the purse to the Congress. And we're just constantly giving more and more and more. And we don't, on something as critical as this whole tax issue, we are just saying to the President of the United States, in spite of the fact that there's legislation that would prohibit it or give direction to him, do whatever we want to do, and we're going to sit here. Now, having said that, Mr. Secretary, do you believe that in spite of my farmers going crazy, Kansas City Southern's world headquarters is in my district, Kansas City Southern Railroad, which means they go south through Kansas, down through Texas, and into Mexico, and they are extremely concerned and frustrated. So are you saying all these people are just misguided and they'll be okay next week?
I don't want to in any way imply that they're misguided, because again, I understand the impact that this is having on specific areas, especially the farmers, which I think are being unfairly targeted. And as I said, it's a major focus of ours to make sure that we can compete fairly, and we're very focused on these trade issues, as you've outlined, but I understand the issues.
Well, do you think that these trade wars have ever worked? I mean, discuss Smoot-Hawley, 1930. Did that work?
Again, I would just say, I don't think we're in a trade war. We're in a situation of trade disputes. Okay, these are not trade wars. And we are very focused, as I said, on the NAFTA issue, which is renegotiating an old agreement. We're very focused on the China issue, which is very complicated, as you've outlined, in fair trade.
Okay, so if I hit Al Green with my fist, we're not really in a fight. We're kind of in negotiations. I mean, we hit China, China hit us back. That's not a war, a fight?
Yeah, I wouldn't say we're in a fight at all. As a matter of fact, the President has specifically commented on his relationship with President Xi and how they're helping us with North Korea and other areas. And again, as I've just said, I don't think in any way we're in a fight with Canada and Mexico. Quite the contrary. We're very focused on these agreements. And I'm going down to Mexico tomorrow as a sign of the importance of that.
Well, do you also agree then that Smoot-Hawley, based on economists, your people that you would respect, agreed that it was the Smoot-Hawley Act of 1930 that created less confidence in the markets, which contributed to the length of the collapse of the world economy, which happened actually back in '29, a few months earlier, that did not contribute?
I think it wasn't the only issue, but it did contribute, and that's why I said we're monitoring this very carefully.
Thank you.
Time of the gentleman has expired. The chair now recognizes the gentleman from North Carolina, Mr. Pittenger.
Thank you, Mr. Chairman. And again, thank you, Mr. Secretary, for being with us today. Really want to appreciate, of course, your strong work and support for our FIRMA legislation to reform CFIUS. A particular note, I'd like to publicly thank Assistant Secretary Heath Tarbert for his great work in brokering this with multiple agencies and committees, individuals in the House and Senate. He did an incredible job, so thank you to him, please. Mr. Secretary, are there any aspects or concerns that you have of the current legislation that would create a loophole or other manner of which it could be exploited by an adversarial interest?
I'm sorry, you're referring to the current CFIUS, or you're talking about FIRMA?
FIRMA, the FIRMA bill as we are negotiating it between the House and Senate.
First of all, thank you for thanking us on the work of FIRMA. I'd like to thank the House and the Senate for the enormous bipartisan support. And as I've emphasized to the chairman and leadership on both sides, we want to get this passed as part of the NDAA. This is very, very important to the Treasury and our role of CFIUS.
Yes, sir. Are there any aspects of it that you would favor or be concerned about, or at the end of the day, the final legislation that you feel like needs to more clearly or address on any issues that remain outstanding?
Again, we're very happy with the legislation. I think, as you know, there's some slight differences between the House and the Senate version, and I actually had the opportunity to meet with the chairman before this morning's testimony, and I think we're going to work together and with the conferees on trying to get this done quickly.
Yes, sir. Thank you very much. Mr. Secretary, following the President's trip last year to Riyadh to meet with the Arab Muslim countries, some 55 or so countries, from that, I recall an announcement of an anti-terrorism financing center to be set up in Riyadh. Do you have any further information on that, or what's happened following that announcement?
Sure, I have a lot of information on that because we are the focus of that at Treasury. That was a major focus of ours for the President's trip. I actually had the pleasure of signing the MOU on my trip last year. It was a major focus. I went to Saudi Arabia and saw the opening of the center. I'll be going back, I believe, in October, and I've committed on an annual basis to go back. We've issued the first sanctions jointly out of the TFTC, and this is one of our major priorities at Treasury.
Thank you, sir. As well, would you have any comments that you could make referencing the MOU with Qatar, given the concerns we had in the past regarding the complicit role that Qatar had with harboring known financiers or funding for kidnapping or other foundations that were utilized, that there was a State Department MOU, which I have read, that would cause and encourage Qatar to be more engaged with us in our oversight?
I can't comment on past activities, but I can comment on current activities.
Yes, sir.
I think they've made significant progress. We're working with them very closely. They are part of the TFTC. We've also had bilateral discussions. I've met with them recently on an ongoing basis, and we are very focused on working on terrorist financing with them.
Yes, sir. Do you see any remaining concerns in terms, do you feel like they've fully turned the corner?
Again, I want to be careful in what I say on this. There's always more work to do, but they've made very significant efforts in the right direction.
Just changing the focus a little bit now, in reference to 2155, could you give me some idea of the role that the Treasury will play in terms of the implementation of that?
We're going to be actively involved. Just checking the number. We are going to be.
Oh, I'm sorry.
Because I always refer to as FIRMA. I apologize. We are going to be actively involved. We've already started working on drafting regulations. We have a team of people that are ready to implement this immediately. So I would hope that as soon as this is passed in the early fall, we can begin implementing this. We're going to work with Congress on additional funding. But again, this is one of the top priorities at Treasury, and this is critical to close holes in CFIUS that we need, particularly around joint ventures and other areas.
At the end of the day, we don't want to look back 2 or 3 years from now and see that we've not done the full job. Thank you.
Time of the gentleman has expired. The chair now recognizes the gentlelady from Wisconsin, Ms. Moore, ranking member of our Monetary Policy and Trade Subcommittee.
Thank you so much, Mr. Chairman. And Mr. Secretary, again, let me say welcome to you, welcome to the committee. Let me get right to it. Our chairman here referred to the economic miracle of the tax cuts. And I just want to say that the only time that income inequality has been greater than it is now is when upon the dawn and advent of the Great Depression. So income inequality is not a good thing for our economy and other people's economy. So before I go on to talk about that a little bit more, I just want to refer back to the things that I talked about in my opening statement, the Universal Service Fund. There are many, many, many more poor people who have fallen out of the middle class because of the bifurcation of benefit from that tax bill. And so despite the declarations that people are better off, I mean, we have seen, wages not stay flat, but actually fall. So this notion that we have, more, less unemployment, but flat wages or lowered wages, You know, that we're having bonuses given out. Walmart is a good example, was up there. They gave $400 million of bonuses to its employees and then simultaneously laid off 10,000 people. So this notion that Joe six-pack is better off is not something that is provable. Having said that, there are more poor people, and some of us are very concerned about the Universal Service Fund. And even though Brad Bailey responded to my letter very short, he was very unresponsive to my requests about how you all intend and plan on administering the Universal Service Fund to make sure that it retains its purpose. And so I will be asking you offline to do that. Now I'm going to go back to the economic miracle here. Because, of course, when we implemented the tariffs, that was a double hit. I grew up in the neighborhood where Harley-Davidson has its international headquarters in Milwaukee, Wisconsin. And the president just started picking on my little hometown company, and I'm just wondering why he's so surprised. Given the structure of the tax bill, I just want to know why you're surprised. They had their corporate rate lowered from 35% to 21%. And then, of course, they repurchased $15 million of their shares, valued at nearly $700 million. It incentivized them to do that. The repatriation of tax benefits to corporations, rewarded people for bad behavior. They laid off workers in Cleaver's district, 800 workers, but they're going to hire 400 new ones in Thailand. Why is the president surprised, since we had a tax bill that incentivized, not raising wages? Why are you surprised? Why is the president surprised by Harley?
Well, again, I would beg to differ, but I think the tax bill actually encouraged significant investment, and that's why.
But it didn't happen. I mean, Walmart.
There absolutely has. In Wisconsin, there's tremendous amount of jobs coming into Wisconsin as a result of the tax bill, and as a result of new facilities that are being
Foxconn?
built. Yes.
Oh yeah. Well, Foxconn, it's going to be a $4 billion cost. To the taxpayers. Is what I call, socializing the costs and privatizing the profits. I mean, it's bigger than our doggone state budget, what we're giving as an incentive. So that dog don't hunt, quite frankly. The math doesn't work out, Mr. Secretary of the Treasury.
I'm not going to comment on the state numbers, which, again, I wasn't
right. They're my
state. My understanding is that the state's analysis was quite well thought out.
No, I read the state analysis, and it's going to cost more than we're going to benefit. And so I am trying to understand why the president is surprised that this tax bill didn't trickle down into wages, but just became a way to buy back shares of his stockholders and didn't trickle down to Joe Sixpack.
Again, we'd be happy to follow up with your office and show you wage growth, which we've already seen and anticipate more.
Time of the gentlelady has expired. The chair now declares a recess for 15 minutes. To order, the chair now recognizes the gentleman from Illinois, Mr. Holtgren.
Thank you, Mr. Chairman. Mr. Secretary, good to see you. Thank you for being here. Honestly, from the bottom of my heart, thank you for your work. I am so encouraged as I travel around my district in Illinois of the optimism that the chairman talked about, of this new growth that we're seeing, of opportunity for everybody, and that when we have an economy, markets that are working and growing, that there is this wonderful spiral of optimism that we see happening out there. And I just want to thank you. I know it's a big commitment. It's tough even to be a part of something like this, and yet I just want you to know I appreciate your work and appreciate the work that you and President Trump and others have done to get this economy growing again, to lower unemployment, and to raise hope and optimism. So with that, just want to say thank you so much. I do have a lot of questions and concerns, as many others have, of tariffs, and thank you for listening on that. I want to talk about other things, if that's all right. I understand that the Treasury Department has been doing a lot of thinking about how technology is disrupting the financial services industry. Some people call it fintech, which I believe is partly attributable to how quickly the options for how consumers access financial products and services is changing. I think it's fair to say that depository institutions have been forced to grapple with a lot of new regulation in the wake of Dodd-Frank that has made it difficult to compete with non-depositories. However, I also believe that its best products and services should be successful. So wondered, do you believe that there is an unlevel playing field for depository institutions and non-depository institutions when it comes to their ability to adapt and innovate? And wondered when the Treasury Department would publish the report outlining some of its policy views on how technology is disrupting financial services, including any recommendations around the availability of a federal charter.
So we should be coming out with the FinTech report shortly. I've had an opportunity to review a draft of it, and it's just going through final review. Look, I would say like any legacy industry or any regulated industry, there are good things that occur and developments outside in the FinTech world, and there's concerns, and we want to strike the right balance between both of those.
Thank you. As you know, the United States participates in the Basel Committee on Banking Supervision and International Association of Insurance Providers. I've been critical of some of the standards established by this group and other international bodies because of their inapplicability to our financial system, especially for smaller financial institutions and insurance providers. Wondered, do you believe these international standard-setting bodies provide value to the global financial system? And then as a global leader in financial services, banking and insurance and capital markets, what do you believe the role of the United States should be in such international standard-setting bodies?
Well, I think in general they do provide value because we do need to be careful and make sure we have consistency and deal with issues. On the other hand, so I think our role is both a leadership in that we provide leadership in the financial markets, but also to make sure our companies are represented in our industries fairly.
Thank you. As you know, the Treasury Department includes a federal insurance office. Recently, FIO has been involved with the establishment of a covered agreement with the European Union, among other things. I wonder if you have any concerns with the amount of independence this office has. How should we institute prudent oversight and accountability of the FIO director without undermining his or her ability to effectively represent the views of the Treasury Department in the United States?
I'm not concerned about the independence. We've worked closely with that area and been actively involved in the covered agreements.
Great. Since you last testified before our committee, Director Mick Mulvaney has also sat in the same chair that you're sitting in and expressed his support for turning the Consumer Financial Protection Bureau into a bipartisan commission. I asked my friend Mick, who was a classmate of mine coming into Congress, if he still believes a commission provides greater certainty to market participants and consumers, and he testified, he said, I still believe that, and I was a co-sponsor of that bill when I was here. I wonder if you support turning the CFPB into a bipartisan commission, why or why not, and what steps the Treasury Department is taking through its work with Congress to turn the Bureau into a bipartisan commission, if they're doing that at all.
I do share his view. We're not taking any steps on pursuing that at the moment, more because it would need bipartisan support.
Again, Secretary, thank you for your work. I've got a few seconds. I would yield back to the chairman.
Gentleman yields back. The chair now recognizes the gentleman from Maine, Mr. Poliquin.
Thank you, Mr. Chairman, very much. Thank you, Mr. Mnuchin, for being here again. Appreciate it very much. Up in the great state of Maine, sir, where you would likely need to go on vacation this year because we are vacation land. It's a great stress-free environment that I'm sure your wife would enjoy. enjoying also. But our economy is doing quite well, Mr. Mnuchin. We have about 2.8% unemployment. There are thousands more jobs than we have workers available. Our paychecks are getting bigger, and it's easier to change jobs if you don't like the one you have now. One of the problems we've had, sir, in our great state is the export of our young adults, because we didn't have an economy that was conducive to the employment they want, and now we have some of our young adults being able to come back home. So I'm thrilled about this. Now, this didn't happen by accident. It's because taxes are lower, and workers and employers can keep more of their own money such that they're able to invest and create more jobs, more opportunities for our young adults. And it's because regulations are also lower at the state and the federal level. So this whole war on jobs is over. Now, thank you for your support in getting us there, first of all, Mr. Mnuchin. Second of all, I'm really concerned about our small savers and investors throughout rural Maine. A nurse in Lewiston or a teacher in Bangor who is trying to save for his or her retirement or maybe their kids' education through a 529 plan. And when you deal with increasing regulations and costs for any business, in particular, in this case, a pension manager, a retirement manager, it means that the rate of return for that saver is going to be lower and the nest egg is going to be smaller. So, you, sir, are the chairman of FSOC. You have a tremendous amount of influence on that 10-member panel. I think it would be incredibly helpful if you were able to lead an effort or support an effort at FSOC to give certainty when it comes to the rules and the guidelines that oversee non-bank asset managers who manage retirement funds for thousands and thousands of small savers in Maine. Because if you can avoid the unnecessary burden of being designated by FSOC as a SIFI, then you can avoid all these expensive regulations that are unnecessary, build up the nest egg for these small savers in Maine and elsewhere. Do you think that's a good idea? And can I get your commitment from you, Mr. Mnuchin, that you'll help us down that path? Yes.
Yes.
Good. I want to make sure we all heard that. Thank you very much. Do you have any time frame within which this great staff behind you and others over at the U.S. Treasury will get to this project?
We'll follow up with your office promptly and talk to you about that.
I appreciate that very much. Thank you, sir. I'm also guessing that you attribute our strong economy throughout the country in better paying jobs and fatter paychecks because of the lower taxes and less regulatory environment in the country. Is that correct, sir, in our economy?
That is correct.
Do you think it's a good idea, Mr. Mnuchin, that Congress should work towards certainty when it comes to the tax code for individuals and small businesses to make those lower taxes permanent so our economy can continue to grow and give more opportunities to our kids?
I do, and that's something we're already talking to Chairman Brady about, and the President is very focused on.
Wonderful. Lastly, sir, I introduced a bill this Congress, the Iranian Leadership Transparency Act, H.R. 1638, and 6 months ago when you were here, sir, we discussed it a little bit. This simply requires the United States Treasury to post on its website in several different languages, including English, of course, and the 3 languages used in Iran, to make sure the world and the Iranian people can see the type of wealth that's been built up among the 70 or 80 Iranian political and military leaders, so they can see how they're being ripped off in order to promote the interests of these mullahs that chant death to America. Can I agree with you, or do we agree with each other that it is good, it is better for there to be more transparency for the world to see how this small group of political and military leaders are suppressing their citizens in the country of Iran?
Well, in general, I support full transparency as it relates to the specifics and us publishing that. That's something I want to talk to my group about and speak to you about.
I really appreciate that, because that did pass this committee in the House floor with a big bipartisan vote, and we greatly appreciate that support. Thank you very much, Mr. Secretary, for being here. I appreciate your candid answers.
Thank you.
Thank you, Mr. Chairman.
Gentleman yields back. Chair now recognizes the gentleman from Arkansas, Mr. Hill.
Thank the Chairman. Appreciate the Secretary being with us today. Thanks for your forbearance for all of our questions. And also appreciate your consistent voice and leadership on the success of the tax cuts bill and the regulatory reforms that the, the Treasury's been at the forefront of. One thing I've heard, I might say, is from a lot of my regulated financial institutions in Arkansas, that they like the appointees that are in the oversight. They like the S-2155, which repealed some of aspects of Dodd-Frank, but they're still not necessarily seeing a change in the exam process or the impact of a turn in the administration from a regulatory burden point of view. I would interpret that from a tailoring point of view. So I think that might be something in your FSOC capacity when you're talking to your colleagues you may want to consult on. Also, speaking of the tax bill and regulation, I think you're aware that some foreign banks who we want to attract to the United States and set up intermediate holding companies here and prosper in America, lending money here and serving clients in America, are put at a disadvantage potentially by the tax code. And that's those who have the regulatory obligation of having a TLAC or total loss absorbing capacity regulatory requirements are in conflict some with the tax bill on how we tax dividends from foreign companies. Are you aware of this conflict?
I am extremely aware of this, and we are working on specifics. We understand the conflict between the tax bill and the regulatory environment.
Good. I know you're in the right spot with domestic finance and tax expertise to try to sort through how best. I hope you'll bring to the legislative branch if we need to take action on resolution.
We're hoping that we can fix it without legislation, but if we can't, we will definitely come back and address it.
Good, thank you. You also referenced to an earlier question about the GSEs, and I share your concern. That's something that in my long career in the public and private sector I've been focused on. I can remember David Maxwell, when he was the CEO of Fannie Mae, testifying in the Senate Banking Committee when I was a staffer about the essential nature that if Fannie Mae didn't diversify its revenue sources, it would go out of business, and that was back in 1983. And I raised that issue because while we all want to reform the GSEs, I noted that the FHFA has permitted the GSEs to engage in a number of new activities, a host of pilot programs which go well beyond their traditional secondary mortgage market role, and that's why the ghost of David Maxwell echoed in my head. Don't you think that they ought to be focused on their core mission of secondary mortgage market to low and moderate income homeowners and not be allowed to go off into things like competing with the private sector in potentially purchase mortgage service rights financing or private mortgage insurance? Are you aware they're submitting these pilot programs?
I am aware of it, and generally I agree with you without commenting on every specific one, but yes, I think they should stay to their core business.
Thank you. I want to echo the comments of my chairman, on the trade issue. There's no doubt that the Constitution enumerates a power that Article 1 is responsible for regulating commerce between foreign nations. That's clear, and over the years, particularly since the 1930s, we've delegated under our oversight tariff setting parameters and certain other negotiating parameters to the executive branch. And I think that's why you see the questions that Secretary Royce got in the Senate and that you're getting today. We all have farm customers that are concerned about soybean prices, and we have intermediate goods manufacturers concerned about steel imports and aluminum imports. I hope you'll be a voice for moving these discussions along quickly and also suggest other ways other than a blanket across-the-board imposition of 232 tariffs under national security purposes. There are other ways to stop transshipments and other ways to beat dumping steel and aluminum. And I would have preferred you going directly to China, to the point, and using 301 on steel and aluminum rather than the national security angle. Any comment on that?
Well, again, I would just say, as I said before, we are monitoring all these markets, soybeans, steel, aluminum, and everything else. We're looking at using 301 appropriately.
Thank you. Appreciate you, Mr. Chairman.
Gentleman from Arkansas yields back. Gentleman from Pennsylvania, Mr. Rothfuss is recognized for 5 minutes.
Thank you, Mr. Chairman. Secretary, as you know, I have previously expressed concerns about the Financial Stability Board's designation of U.S. insurers as systemically significant. These designations have typically preceded domestic determinations, and it is especially troubling that the FSOC has historically appeared to act as a rubber stamp to the FSB. I understand that the FSB is currently reevaluating its approach to systemic risk and that it is considering shifting to an activities-based approach. What is the U.S. position on using an activities-based approach to systemic risk as opposed to designated individual companies?
We absolutely support that. That's something we're shifting towards at FSOC as well, and part of the reason why they're looking at it is because of discussions with us.
I understand that with your traveling to Mexico, I want to encourage you in your conversations with them about the importance of developing their economy down there, because the fact is we have a horrific drug problem here, and if you talk to the Mexican officials, they believe that we're responsible because there's a demand side part of the equation. The fact of the matter is they have not produced an economy down there where people are having the kinds of jobs that would keep them gainfully employed. So I continue to watch the situation in Mexico with alarm, the impunity down there, more than 100,000 people have been killed, very few prosecuted on that. So I encourage you in your talks with them. While we're talking about Latin America, though, illicit financial networks continue to facilitate drug, human, and weapons trafficking throughout Latin America. Groups like Hezbollah are especially active in places like the Tri-Border region and Venezuela. This not only poses a threat to our national security and regional stability, it also enables bad actors across the continent to flood places like Western Pennsylvania with deadly drugs. What is the Treasury Department doing to target illicit financial networks in Latin America, including working with countries individually and any leverage that we might have through organizations like the IMF or World Bank?
I can assure you it is a big focus of ours. There is more work to do, but it is a big focus.
Are there specific groups or states that Treasury has prioritized in Latin America?
Again, I'm happy to go through it with you privately. There's a whole bunch of different areas that we're focused on there.
I want to thank you for your hard work on tax reform. Just 6 months after enactment, the American people are already seeing the benefits of this transformative law. Tens of millions of American workers are receiving bigger paychecks under the new withholding tables. 4 million workers have received bonuses, raises, or expanded benefits, and over 1 million new jobs have been created. For the first time in many years, there are more job openings than job seekers. This is bringing workers who were pushed to the sidelines during the previous administration back into the labor force. The Tax Cuts and Jobs Act, coupled with historic regulatory reform, has once again made our country the land of opportunity. The Tax Cuts and Jobs Act also established a program that will ensure that the benefits of our booming economy reach areas that have historically been overlooked, the Opportunity Zones program. My district in Western Pennsylvania has several designated opportunity zones, including tracts in Beaver Falls, Midland, Johnstown, and Aliquippa. These are strong communities that can once again thrive thanks in part to the attractive tax incentives offered for Opportunity Zone investments. Can you provide an update on the implementation process for the Opportunity Zones program?
Well, I'm glad you've asked about that, because actually it's one of the most important parts of the tax plan that gets the least amount of attention. I think it's enormously powerful. We've obviously been working with all the states on designations of opportunity zones. We've actually also traveled across the country and meeting with investors and other groups promoting this. So this is something that Treasury is very actively involved with. Actually, on my way to Puerto Rico next week, on my way to the G20, all of Puerto Rico is an opportunity zone. So something we're very excited about promoting.
Can you give us an idea when we might see any kind of final regulations that might be required to implement this?
I think you're going to see regulations soon, and again, people will be able to invest in it. We've had very specific conversations with many investors.
Do you care to put some parameters around soon? Can I push you a little bit?
Soon as this year.
Great. Is there anything that Congress can be doing to help facilitate this process?
No, I think we're all set. Thank you.
Now that the U.S. has withdrawn from the Iran deal, we have the opportunity to use additional sanctions to change the hostile behavior of the Iranian government. How does the administration intend to apply sanctions going forward to achieve the desired result?
Sorry, I missed the end of your question.
How does the administration intend to apply sanctions going forward to achieve the results we want to see with respect to Iran?
Again, we're gonna snap back all of the Iran nuclear sanctions which are going in place, and we will continue to roll out non-nuclear sanctions as we have in the past.
Gentleman's time has expired. The gentleman from Texas, Mr. Williams, is recognized for 5 minutes.
Thank you, Mr. Chairman, and Mr. Secretary, thank you for being here. And thank you for your candid testimony today. We appreciate that. This morning, and for your dedication to our country, but this Congress and the Trump administration are keeping the promises that they made to the American people. Promises like rolling back regulations and reforming the tax code to make businesses more competitive and put more money in the pockets of hardworking Americans. Unemployment is low, economic growth is high, and consumer confidence is skyrocketing. These are just a few examples of the United States' prosperous new trajectory under Republican leadership and under your leadership. Well, these are promising signs. I share some of the concerns we've heard today from my colleagues regarding the impact of tariffs on American jobs and businesses. Tariffs are a cost directly passed on to the consumer and risk damaging effects on the historic gains that we've made over the past 2 years. And I look forward to working with you and our trade representatives and the President to combat unfair trade practices, safeguard American jobs, and promote free trade. So, Mr. Secretary, as you're aware, I'm a car dealer. We've talked about that. And members in both chambers of Congress are having difficulty understanding why we have imposed 232 tariffs on our allies, and we should be acting in unison to prevent China's economic nationalism. We've also managed to impose tariffs on washing machines from South Korea at a time when we need a united front against Kim Jong-un, and soon we may be alienating Japan as well through national security tariffs against auto imports. So my question is, can you describe in detail the expected end game for these trade actions, and what is the specific time frame you expect for these policies to achieve their desired effect?
I think the end game is that we're focused on having free and fair trade for American companies and making sure that American companies can compete fairly. And as I've said, I put them in 3 buckets. One bucket is NAFTA, Canada and Mexico, which are a big priority. That's something we're very focused on. The other is the EU. The President was just in Europe having direct discussions with European leaders. He's going to be meeting with the EU later in the month. And the third is China, which unfortunately many of our talks have broken down, and they've reciprocated with tariffs. But again, I think our objectives are pretty clear.
Another question. Now that the administration has withdrawn from the JCPOA, how will U.S. sanctions bring about the behavioral change in Iran required for a long-term suspension of the country's enrichment activities?
I think we're already beginning to see the impact. So we've seen many companies already announce that they're going to be withdrawing from their investments there. I think we expect that the Iranian oil shipments will decrease significantly. We're already having conversations with our allies about cutting their purchases. So I think we're beginning to see a tremendous impact.
And lastly, can you comment on Treasury's use of sanctions as a tool to cut off the flow of funds into North Korea's weapons program, and how can we pressure countries such as China to do more and take a tougher stand against North Korea's weapons program?
I think the sanctions have been very effective, and I think that's a major reason why they've come to the table to negotiate and agreed to give up nuclear weapons. And as I mentioned earlier, China has been a very important part of cooperating with us on that.
Well, I just want to close by saying thank you for being here. Appreciate your effort, that of the President, and speaking somewhat from Main Street, small businesses. Let's keep what we're doing. Business is good. Thank you a lot.
Gentleman from Texas yields back. The gentleman from Minnesota, Mr. Emmer, is recognized for 5 minutes.
Thank you, Mr. Chair. Thank you, Mr. Secretary, for being here and sitting through this rather long hearing. Mr. Secretary, you've talked about the importance of initial public offerings as a means of creating capital. You've done that before this committee during your last 2 visits. We've expressed our concerns, many of which you share, with the overall reduction or lackluster performance of IPOs compared to historical trends. For its part, the committee continues to move legislation to build on the success of efforts like the Jobs Act to enhance capital formation. Earlier this week, the House unanimously adopted the Main Street Growth Act, which will allow for the creation of specialized venture exchanges to encourage small and emerging companies to go public and help them generate the investor attention and capital they need to be successful. Encouraging more companies to participate in an IPO is one thing, but encouraging small, early-stage companies to go this route is especially important. Based on your experience in the financial sector, can you speak to why it is so important for new and emerging companies to go public, how these new early-stage entrants make our markets more dynamic and help businesses and everyday Americans alike?
Well, despite the fact there's an abundance of private capital right now for early-stage companies, the IPO market has always been critical. And public financing, that's what's made all of our companies very successful, access to the most liquid capital markets in the world to grow and raise capital. And we look forward to working with you on it.
Thank you. I understand the Treasury is, and I think Mr. Hultgren and others may have referred to your upcoming report, so I apologize because we come and go. But I understand you're getting ready to release your fourth and final report on financial innovation in accordance with the President's 2017 executive order. I've been taking a closer look at how advances in financial technology can be used to help entrepreneurs start a business and improve the way they operate or enhance their access to capital. I think you were asked, but I wasn't clear. And again, I was coming and going. Can you give us a time frame first on when you expect that report to be out?
As I've mentioned, I've just recently reviewed a draft of the report, so I would hope it comes out in the next 30 days.
All right. And again, I don't mean to cover old ground, but I just want to be clear, because one of the statistics that I've found very concerning of late is that the percentage of Americans under 30 years of age that own a private business is at a 24-year low, having fallen to just 3.6%. This figure, as recent as 2010, stood at 6.1%, and its peak stood at over 10% in 1989. You commented a little bit earlier, or at least you were asked about the fintech issue. Is the draft you reviewed, and I didn't hear it clearly, is that going to be covered in that draft?
Yes, a lot of those issues will be addressed.
Okay, wonderful. Lastly, I want to ask you, you're no stranger to the complexity of the Bank Secrecy Act and the anti-money laundering regulatory structure. Last summer, when you testified before this committee, Representative Luetkemeyer asked about ways to improve the regulatory harmonization of our BSA-AML system. The committee has been working on legislation to encourage Treasury to take a more prominent role in coordinating BSA-AML policy and implementation, which I believe most of our financial institutions and entities support. As this committee and this Congress continue to work on this issue, are there any additional efforts underway at Treasury to improve regulatory harmonization among the other federal regulators when it comes to our BSA-AML regulatory structure?
Yes, we have a team that's working on that now. So both a team at Treasury in our TFI area, FinCEN, they're working with the OCC, the Fed, and others, so that's actively underway.
And do you anticipate they will put out some type of report? Obviously, they'll report to you, but will we have an opportunity to see what their recommendations and suggestions are, and will we play a role?
I'm not sure it'll be in a form of a report, but we will make sure we communicate back to you in terms of us putting out some type of guidance or general comments along those.
Excellent. I'll look forward to that. Thank you for your time, sir. I yield back.
Gentleman from Minnesota yields back. Gentleman from Michigan, Mr. Trott is recognized for 5 minutes.
Thank you, Chairman. Thank you, Mr. Secretary, for your time today and all of your tremendous work on our economy and job growth is just amazing. One of the benefits of going towards the end of the batting order is I get to listen to all my colleagues and take license to respond to some of them. So for the record, I do consider you to be a stable genius.
Thank you. I take that.
Please
nicely.
take it as a compliment.
The fact that I lasted this long means, by definition, I am.
For the record, Mr. Meeks is misguided when he suggests you go back and admonish the President to fill the ambassadorships. The real problem, we all know, is the Senate. There are 569 bills that have been passed out of the House that are dead in the Senate. And I, for one, am happy they're going to have to be here in the month of August to get some work done, and hopefully they'll confirm a few ambassadors. Now, Mr. Scott from Georgia suggested that his state would be the most hard-hit state by the trade war. I take issue with that. My state of Michigan, no doubt, will suffer the most if the trade war ends badly. And here's my concern. And I spent 30 years in business, did a lot of deals, found working collaboratively rather than a scorched earth approach was much more productive. And when you consider the President's comments in Quebec, his comments yesterday in Brussels, the comments about the wall, I worry that it's going to be difficult to reform NAFTA in a way that won't end up hurting my state, the state of Michigan. By the way, my district has the largest number of Ford Motor employees of any district in the country. And so I'd just like your thoughts. You said you've been to Canada, you're going to Mexico. I'd like to have some insight from you on how you address some of the bluster from the President, which, again, and China's a whole different story. You said it's complicated, so we'll talk about China another day. But with respect to our allies, I'd like to know that we're going to end up in a good place, particularly as it relates to my state in Michigan.
Yeah, I'm cautiously optimistic, but I expect we're going to end up in a good place, and that's a major priority of Ambassador Lighthizer and the entire economic team.
I think the rhetoric, though, just to be more specific, I think when you look at Prime Minister Trudeau, for example, after Quebec, I think it makes it more difficult for him to reach a fair and free trade agreement with the United States. Because if he does, in the politics in his country, I think he'll be lambasted. So for whatever that's worth, I think there's a time and place for tough rhetoric. I do worry as it relates to trade and our allies. In response to Mr. Ross, you suggested that in the next Congress, housing finance reform would be a priority, and I'm glad to hear that because I do worry that we're moving towards more relaxed underwriting guidelines that could allow history to repeat itself. With respect to Fannie and Freddie, you had mentioned in your earlier comments that you'd like to see a bipartisan solution. That would be great. It's been very elusive for this Congress to come up with a bipartisan solution on housing finance reform, 10 years in the making perhaps. So assuming that that's not possible, which is not a big leap of faith, would it be possible, would you support in the 116th Congress a more simple approach, which is just to get Fannie and Freddie out of the second mortgage market and to get them out of the refinance market? The refinance loans represent 2/3 of Fannie and Freddie's portfolio. That alone would significantly overnight, over time, diminish their role, the government's role in housing finance.
Well, again, I want to be careful of specific comments, but I don't support them getting out of the refi market broadly. I think that to the extent refi loans are underwritten properly, and there should be certain limitations on cash out and other things, but to the extent rates go down and homeowners want to refinance, I don't think they should be penalized.
But again, if rates go down and they have a good credit score and they refinance, and then property values drop, then the government potentially is going to be exposed again.
Again, without getting into all the details, I think the problem that Fannie and Freddie had was really as a result of poor underwriting standards and buying many loans, subprime loans, and other things that they never should have been purchasing. So I think that there is a prudent solution. My preference is we do this through congressional action. If not, we'll look at administrative options.
Thank you. Last question. The orderly liquidation authority outlined in Title II of Dodd-Frank continues to be a concern because I believe it to be a license for FDIC to use taxpayer dollars at Treasury to bail out banks. You think that should be a priority in the next Congress to try and revisit that process so that we can come up with a better solution?
I think there are recommendations we've made on that, and we'd be happy to work with you and others if there's a desire to move forward on that.
Thank you, Mr. Secretary. I yield back.
Gentleman yields back. Chair now recognizes the gentleman from North Carolina, Mr. Budd.
Thank you, Mr. Chairman, and thank you, Secretary Mnuchin, for being here. It's good to see you again. I want to start by commending you for your role in implementing and promoting the Tax Cuts and Jobs Act. As many of us have thanked you, I want to continue in that. And as you know, we're growing at 3%. Some would say even more. And I know I speak for a number of us gathered here today that we appreciate the role you played in that. But since this is a hearing on the state of international financial systems, I wanted to switch from H.R. 1 and move to some questions that are of importance to me and many in the American insurance industry. So as you know, Mr. Secretary, we operate under a state-based system of regulation. The U.S. insurance market has long been one of the largest insurance systems in the world. In fact, more than half of the world's 50 largest insurance markets are U.S. states. North Carolina's market, for example, the state I hail from, is bigger itself than the entire markets of Belgium, Sweden, Denmark, and Finland. Yet, U.S. officials have been engaging in overseas negotiations that would ultimately import European-style capital standards for U.S. companies and their policyholders on Main Street across America. This is why I co-sponsored and voted to pass Chairman Duffy's International Insurance Standards Act on Tuesday to protect our companies here at home from being harmed by European-centric regulation. So, Mr. Secretary, would you agree that the U.S. system of state-based insurance regulation works well, that it's well capitalized, solvent for the most part, and that it's important for the Treasury Secretary to defend that system from the intrusion of both federal and foreign regulation?
I do.
So at risk of sounding like my high school English teacher a bit, would you care to elaborate? So if you care to share a little more on that.
Well, in general, we very much support the state-based system. It works. It's worked well. There are certain issues that, again, do require some federal intervention and oversight, but this is a system that works. It's not broken, and we don't need to change it. And we need to make sure that U.S. companies that do international business can operate appropriately, and that's the reason to participate in the international forums, but we're not looking to change the system.
Very good. Thank you for that. So and just to point out from many on the committee's perspective, one reason that we passed Duffy Hack is because we feel like U.S. interests aren't being represented well overseas. If that's the case, then Congress will step in a bipartisan fashion, as referenced by this week's unanimous vote. So switching briefly to another topic, Mr. Secretary, some have called for congressional action to improve and expand upon existing information sharing tools between financial institutions and government authorities, as well as among financial institutions in cases of suspected money laundering and terrorist financing, including changes to the scope of liability safe harbors and the types of information that may be shared. Can you please discuss Treasury's relationship with the private sector to enhance and facilitate counter-terrorist financing objectives?
We work very closely with the private sector. It's very important. I think I mentioned in the past, terrorist financing is a major priority of the department and a major priority of mine, and I think we have a very good collaborative effort with the private sector.
So although Congress, just to follow up on that, although Congress intended Section 314B of the Patriot Act to allow banks to share information on illicit financial activity between themselves, banks have felt constrained by the rules interpreting that statute. So is it time to readdress this issue and allowing banks to better share such information with appropriate safeguards, I would add?
That's a specific issue that we are working with them on, yes.
Thank you. Would you be supportive of legislation that achieves that objective?
I would, but we'd want to make sure we work with you on the specifics of that.
Absolutely, and thank you. And again, thank you again for being here. Mr. Chairman, I yield back.
Gentleman yields back. The chair now recognizes the gentlelady from Utah, Ms. Love.
Thank you, Mr. Chairman, and thank you, Secretary, for being here today. I just want to be very clear that the questions that you're getting today, I usually go into my district and ask them what questions they would like me to ask of the Secretary. So just know that these are coming from people who have genuine concerns. You're before Congress today, and forgive me also if you've answered some of these questions. I need to make sure I get some of these on record. So you're here before Congress today to report on the status of international financial system, including the U.S. involvement in the International Monetary Fund. In its recent World Economic Outlook, the IMF expressed concerns that the prospect of trade restrictions and counter-restrictions threaten to undermine confidence and derail global growth prematurely. Do you share those concerns?
I don't, and I would just comment, although I support the IMF, I also question some of their projections on the U.S. economy as well.
Okay. Back in May 20th, you were quoted as saying that tariffs were on hold, yet less than 7 weeks later, new tariffs on Chinese goods went into effect and were immediately met by retaliatory tariffs by China. Clearly, other people in the administration weren't as interested in keeping things on hold. In the meantime, I heard a lot of concern from many different people in Utah, industries in Utah, about the negative impacts that they're already seeing from the uncertainty and the new tensions in our trading relationships. Just yesterday, I actually had a small business owner from my office come to my office, Utah Metal Works, which recycles metal and sends about 40% of its business overseas. They're suffering from uncertainty, and they want to see an agreement be reached, and not just the president, beating up on trading partners. At the end of the day, they want to see some results that is not going to impact their consumers. So, do you know what the end goal is? Is there a master plan? We're trying to figure this out. We're answering questions of our constituents, and it's very difficult to try and figure out what the strategy is. We know what the end goal is, but do you know what the strategy is? Do you know if there's like a master plan?
Well, first let me say the tariffs were on hold. We were close to having an agreement. We couldn't reach an overall agreement, and that's why the president decided not to keep them on hold. As it relates to a master plan, it's pretty simple. We've told China, we've given them a long list of issues. I think the answer is we want to make sure that they open up their markets and that they treat our companies fairly so that we can increase exports. I think, they buy about 130 billion of our goods. We buy about 500 billion of their goods. There's a huge opportunity if our companies can compete fairly to increase exports significantly. So the master plan is for them to open up.
The Federal Reserve said last week, right before the new tariffs on China imports were imposed, that the possibility of a trade war has forced some companies to put on hold their investment plans. So we now find ourselves in a situation where the uncertainty over global trade policy is causing businesses to scale back or postpone their capital spending plans that were incentivized by what we did in Congress in terms of implementing the new tax law. And tariffs, on the other hand, we all know it's really a tax on the consumers, and it will hit American businesses and consumers. It seems like one hand is contradicting what the other hand is doing, and they're not working. What are you doing with the administration to ensure that our trade policies don't undermine that growth that we're seeing, that positive growth that we're seeing in our businesses and and that we're experiencing?
Well, let me first say tariffs are sometimes paid by the consumer, and sometimes they're paid by the seller and absorbed by the seller. So I don't believe they're necessarily always a tax that's passed on. I'd also just say that the president is very focused on economic growth. This is something that he campaigned on. From the beginning, we've been focused on regulatory relief, taxes, and trade. And I can assure you that we're not going to do anything that's going to jeopardize the great growth of the economy, although I recognize there are certain areas and certain markets that have been targeted that we need to be careful and sensitive to.
You do recognize that uncertainty does hurt our economy, and it really makes it difficult for people to invest. So
I recognize
just
that.
The uncertainty is difficult. Anyway, I implore that you would work to end this thing soon. Thank you.
Time of the gentlelady has expired. The chair wishes to inform members that votes on the floor are imminent, and per agreement with our witness, he will be released no later than 1:15. Currently, I expect to clear 3 more members. Gentleman from Georgia, Mr. Loudermilk, is now recognized.
Thank you, Mr. Chairman, and thank you, Mr. Secretary, for spending a good part of your day with us. I know this is probably not the most entertaining nor the most productive thing you could be doing today, but it is very important for us. It's very important for our republic to do this. Real quickly, just one issue I want to touch on, and it's something that I'm hearing when I go back to Georgia, especially from local banks and credit unions, is the FinCEN customer due diligence rule. And most of them feel that for a part of it is very intrusive and burdensome, and they're still unclear on a lot of the compliance, and they find it very difficult to implement because of the lack of clarity. And if I can, I'd like to share just a few anecdotes of some of the things that I have been told recently by these banks. One of the most common frustrations is that FinCEN has been very vague in telling banks what to do if a new customer wants to open an account but can't provide the required information. They say the OCC has indicated they shouldn't even open the account in that case, and that FinCEN has provided no guidance on the issue. Another one is if an existing customer wants to open a new account but is unable to provide the required information or refuses to do so, should the bank terminate the entire relationship or just not open the new account since the rule went into effect on May 11th? If the bank closes all the accounts, is that frowned upon as de-risking by the regulator? So they get kind of caught in this no-win situation. But if they do open the account, many times they feel they're in violation of the regulation. And so it's resulted in significant delay for a lot of the customers. Another problem is when the customer opens a new account, then 2 weeks later they want to get a debit card, and a month later they want to enroll in online banking. The banks don't know. Do they have to fill out the forms again for each one of those events? Some banks have used forms that simply certify that beneficial ownership hasn't changed, but bank examiners saying that's not acceptable. Another main concern is that banks are now having to ask people who have been their customers for years, even decades, for this information. Their customers don't understand why the bank is asking them, and now they think that the bank no longer trusts them, and it hurts the foundation of the bank's relationship with the customer. An example, a longtime customer simply changes their address. Nothing else has changed other than address. The new beneficial ownership forms do they have to be completed? This also applies to routine renewals of lines of credit, certificate of deposits, et cetera. And the last one, the rule is also causing issues for accounts that may not have a clear beneficial owner, such as accounts for class reunions, civic organizations, school clubs, and churches. In one case, a child was recently diagnosed with cancer, and the school did a fundraising campaign to help the family. The mother worked at the school and was a customer of the bank, but the bank turned her away because they were afraid of getting the beneficial ownership questions wrong. So my question is, I'm sure you're aware of these problems, and since FinCEN currently does not have any plans to issue formal guidance for the CDD rule, what would you suggest that banks do to get clarity on these specific issues?
Well, you've asked some very good questions, many of which I'm not going to answer the specifics of, but I will follow up with FinCEN, the OCC, and others, because as I've said before, I'm a big fan of proper regulation, but I'm also a big fan of proper guidance so that they can follow the regulation. And I think you've raised a bunch of issues. I will say, as a broad comment, customer due diligence is very important. We need to have banks know their customer. And we need to get this right between what is particularly on small banks a big burden and the customer in making sure we have the information. I've been a customer who has to provide this stuff, and I know it is quite difficult, and many of the minor changes we should make sure that the banks know how to deal with these issues.
Okay, and I thank you, and I look forward to your response on these in a little more detail. Mr. Chairman, I yield back.
Gentleman yields back. There is a vote pending on the floor, a little over 10 minutes. The chair expects to clear 2 more members, but restrict them to 3 minutes. The gentleman from Ohio, Mr. Davidson, is recognized for 3 minutes.
Thank you, Chairman. Mr. Secretary, thank you very much for your testimony today. And as CDD has been discussed extensively, I appreciate your sentiment that perhaps a heavy hand of government isn't necessary, and perhaps the presumption might resemble the way we treat the Second Amendment more than the way that we treat other things, where everyone's held liable to provide information subject to criminal penalties if they don't. I don't think we need to find new ways to make more people criminals. We do need to get after the terrorism and illicit finance that's out there, and I think that's the sentiment. That part unites us. The approach has got us fairly divided, so really look forward to any way to collaborate on CDD or beneficial ownership more broadly. Really appreciate the emphasis you've given as Secretary to terrorism and illicit finance. And we saw that kind of marginalize and take a backseat under the previous administration. Without going into any of the details in this setting, are Operations Cassandra and Reciprocity back on the table now? Or is there, what's the status of those efforts?
The things are being considered.
So you're still assessing whether to pursue those investigations?
I want to be careful on commenting on the specifics.
Okay, thank you. We've talked a lot about trade, and there's been a lot of attention given to trade deficits. And, you know, mercantilism emphasized the importance of trade deficits. And, of course, under mercantilism, we were largely using gold to settle current accounts, and gold can be hoarded. So there was an idea that it was a zero-sum gain. Today, we don't have that. We have something consumable, the petrodollar, basically the premise for our currency, and it's consumed, so people don't hoard it. Trade deficits are commonly misunderstood as a zero-sum game. Are you confident that the dialogue that's being had today as we negotiate with our allies and with our competitors, strategic competitors in the marketplace, that we are focused on trade, free, fair, reciprocal trade, and not a more mercantilist zero-sum idea?
I am completely, but in many of the cases where we have the trade deficits, it's because there are unfair trade practices in place.
There are certainly unfair trade practices. Prior to coming to Congress, I was a manufacturer and have been on the receiving end of many of those unfair trade practices. However, the deficit is largely attributable to the current account balance. So we have the free flow of goods and services, but we also have the free flow of capital. Could you address the idea that, in reality, the only likely way for us to decrease our deficit is to enter into a recession?
No, I don't agree with that at all, but we can follow up.
Time of the gentleman has expired. The chair now recognizes the gentlelady from New York, Ms. Tenney, for 3 minutes. She will be the last member recognized before we dismiss the witness.
Thank you, Mr. Chairman, and thank you, Secretary Mnuchin, for being here, and I always get to be last. So you get to be just a little commentary and some quick questions. I do appreciate the President's position and your position on realigning our global markets and making sure that anyone who has access to the greatest marketplace in the world, the U.S., does it in a fair and reciprocal way. Although I am concerned, and I'm just going to express this because I know you've answered it, a little bit about what's happening in New York State in my rural district, where dairy is one of the #1 industries. And we contend that we think that Canada has violated Class 7 pricing. I know there's some differences of opinion on that. I'd like to, you know, and obviously New York State, we have trouble with an oppressive tax and spend regime in Albany that has made it really difficult for our dairy farmers to survive. But also another thing that, another area is in crops, and particularly hay. And that, again, gets back to where we're going with the trade and the tariffs on the ability of Canada and other border states or border countries to be able to dump agricultural products on U.S. And I just hope that, you know, I knew you've answered some of these things, but I just want to bring those to light because they are happening in New York State and want to be sure you're aware of those. Also, just I'm sure the President and comments made by my colleagues on the other side is delighted that they are he is occupying some rent-free space in their head because they are reading his Twitter account regularity. So I thought that was amusing. But I do happen to think that you are a stable genius, and I do think the President's geopolitical and political instincts are proving to be maybe true. So I want to get to something beyond that and a little bit back and maybe a deeper dive into the idea of Iran sanctions and the Iranian state model. And I know going through just quickly, we know you've highlighted a little of this, but the waiver on the Islamic Republic of Iran broadcasting, that actually expires, those sanctions expire today. Do you believe it is in the best interest of our nation to allow them to expire, and would you be willing to reinstate those sanctions in light of the administration's policies toward Iran and the fact that OFAC has already placed the IRB under direct general sanctions? Would that be something you could support as of today?
Again, I'd rather you follow up with us privately and I get your views because it sounds like you have an opinion on this, so I'd like you to share it with us.
Thank you.
Privately.
Yeah, I mean, I know it's something that's headlining, and it is happening, and the past administration was pursuing waivers, and I just want to know where we're going to go today. We know that some of the resources that have been used under the former JCPOA were used for terrorist means. So I appreciate you getting back to us. And thank you again. I'm running out of time, but thank you again for your great work. And the Tax Cuts and Jobs Act have been It was a difficult process, but have been a godsend for my region, and I've yet to go to a business, small, medium, or large, that hasn't praised the tax cuts and talked about new jobs, raises, and bonuses for their employees, and especially their middle-income taxpayers. Thank you so much for that.
Time of the gentlelady has expired. I'd like to thank our witness for his testimony today. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witness to the chair, which will be forwarded to the witness for their response. I would ask the secretary to please respond as promptly as you are able. This hearing stands adjourned.